markets talking to you this morning?
The markets are saying we're risk on and we're not afraid. And basically, we're going to keep going. And if you take a look, it's not just stocks. You're also seeing junk bond yields at new record lows of 3.84%. You've got spreads at post-crisis tights. You have this basic complacency, yes, but it's well-founded because you've got so much cash out there that it's pushing asset prices up and people don't see an end to it, Tom.
Matt Miller, lots going on this morning. I think of Shonali Bassick down at the Goldman Sachs offices yesterday. James Gorman out. I love this, Matt. I thought of you. If you can go out to dinner, you can go to the office. I paraphrase the leader of Morgan Stanley this morning. It's like he made that quote for you.
Those kind of quotes aren't my favorite. I used to have a fraternity brother who said similar things. In any case, I think Lisa is 100% right about the markets right now. The bet is full on that the Fed is going to hold tight. Mohamed El-Erian had a great column in the FT in which he said the Fed has to hold strong to prove its credibility. And this is the key. It's not just for markets. If they waver now, they have no more credibility.
Well, let me do the data right now. And we're doing this, folks, into a huge amount of data today and on to the Fed meeting tomorrow, our special coverage of the Fed. We'll do that tomorrow. Right now, futures, they're green. Futures up 3, Dow futures flat. NASDAQ leads the way again, whether NASDAQ Composite or the NASDAQ 100 with that big tech weighting as well. The yield not giving me much, maybe 140, whatever we were, to 148 over the last 48 hours or so. The real yield and negative 0.90 speaks volumes. That hasn't in any way moved up towards any kind of reflationary tone. Dollar a little bit stronger. Very importantly, yen weakens 110.15. Kitchuk's making a big deal of that this morning. The euro can't get out of its way, 121.25. On international relations and all that's going on, we need a brief. Lisa?
Yeah, and before we get to the brief, I just want to note something on the price of crude at the highest level since 2018. The latest fund manager survey from Bank of America for the month of June saying that net long commodities is actually considered now the most crowded trade out there. Kind of interesting to sort of put this out there.
This is, folks, a value add with your daily brief.
Oh, my goodness. Can you believe there's actually value here? 8:30 a.m., we get that slew of data. We're talking about retail sales, typically a really good barometer of consumer spending. This time, perhaps a little less so. People actually expecting a decline in the month-over-month retail sales simply because people are shifting their spending to going out to eat, perhaps not going back to the office. Also, we're going to get producer price index data, basically to get a sense of how much the goods inflation has been going hot. Then today, the EU-US summit in Brussels. Very interesting to see the Airbus-Boeing Accord, the idea that both regions decided to drop subsidies for airplane manufacturing.
Isn't the banner that kissed and made up?
That's a huge deal. But this is, it's not just President Trump. Right, exactly. Thank you. This is exactly it, Matt. You are correct. It's been 5 years, but it even started back in 2005, pre-President Trump, way pre-President Trump. So these tensions have been ongoing. The idea that they could come to some
the agreement is only for 5 years.
Right, but these tensions have been percolating for a long time. So yes, they have it only for 5 years. That said, the fact that they have any agreement whatsoever that they have a common enemy in China, and that not enemy but rival is probably a better word, is telling. And you're also hearing harsher tones out of the European Union with respect to competition with China. Moving on, 4 p.m. we get the total net April Treasury international capital flows. Recently, you've seen a huge uptick time in the number of international investors coming in buying treasuries. This, we're going to get a new read on that.
Such nerd alert.
This has been, honey, this whole thing could be nerd alert. Yes, absolutely. But this is interesting because the bond market is a global dynamic. We're talking about global disinflationary trends being imported to the U.S. debt market. The question is, how much longer can that continue, and how much legs did that get from a weaker dollar, Tom?
Man, I want to translate this, and you're the expert on this. Does anybody in Europe drive Harley Davidsons? All this Boeing Airbus thing is really about bundled tariffs of wine and the rest of it, and part of it's Harley Davidsons over to Europe, right?
Well, a lot of people do, but those people are very wealthy because Harley Davidsons are incredibly expensive here. And this is one of the things that I'm hopeful, one of the reasons I'm hopeful for an agreement, because I can't go out and buy a Sportster for less than like 20 grand.
Yeah.
And we're talking about a $10,000 bike.
We could never do this with Faro. I just could never get, I could never get through Harley Davidson with Faro. Matt, you want to talk about English soccer?
No, not at all. Not at all.
Okay, thank you.
I
We'll
would
move on
rather,
then.
yeah.
We'll move on then at this point. You did better than Romaine.
I would rather watch
on
paint
that as
dry.
well. Right now, we really want to focus on the markets as well. We've got a lot of international relations going on, but with the Fed meeting and with the economic data today, markets matter, and there's no one better than Brian Weinstein to hold court on this out of Penn with Morgan Stanley and ahead of all of their global fixed income. Brian, an open question to begin with your massive remit for Mr. Gorman. What's your biggest headache right now? I want to know your biggest headache running global fixed income right now.
Tom, the biggest headache is people need yield and you can't find it, right? No volatility, the Fed that's on hold, seeming to have an inflation problem where it's not in any of the prices, and clients keep putting money in, right? As equities move up, we're getting reallocations into fixed income, and it's just hard to find quality bonds with decent yields.
This is so important, the idea of reallocations and the idea of rebalancing, and frankly, the idea of something coming due and you got to go out and find another warm spot for it. Do you have any belief that the wall of money that's been identified out there is going to go into the bond, the bill, the note to capture yield, or does it just forever stay in short-term paper?
No, we are definitely seeing money move out the curve, and we think as the summer goes on, we'll see more demand for the long end, which is amazing at these yield levels, right? You would think it would stay all on the front end, but it's trickling out. We saw it in Europe years ago when they went negative, and at zero here, we are definitely seeing investors move away. I mean, still money coming in the front end, but other money trickling out the yield curve into risk assets.
Brian, some people take a look at bond markets and they say that they're manipulated by central banks, which have pushed bond yields lower. Other people say maybe we should listen to the message that bond markets are sending, which is disinflationary and is a slower growth picture than perhaps could support equity valuations where they are. Where do you fall in on that debate?
Historically, I've been a big believer in the demographic story, that bond markets, while somewhat manipulated here by central banks, always tell you a story. That said, I think it's getting a little hard to look through all of the signs that you're just not as sure anymore, right? If there is a disinflationary tail that we should be worried about, it's hard to argue that there's not an inflationary tail that the Fed is playing with. And we're a little surprised, as much as we thought rates would come back down and stabilize, that they've been as sticky as they are here.
How much is this an international story, Brian?
It's been an international story for years and years, right? Started with Japan in the 90s when everyone thought rates there were too low. So the disinflationary trends in the developed world are quite established. And that's why the Fed, I think, is trying to fight them with average inflation targeting and being patient. So maybe they'll win, maybe they won't. But I do think they're fighting a global disinflationary trend.
What are you watching for tomorrow from the Fed? I mean, clearly they're not going to turn hawkish, or else they would lose a lot of credibility. But what do you watch in a meeting like that?
Listen, I think you watch, as much as I hate to say it, the dots at the end, right? Are there people that outwardly want to hike sooner? I think that's one thing you watch. I think you need to watch how they discuss taper and mortgages. I don't think they want to slow down, but I do think they have a problem supporting the mortgage market outwardly here. So I think it will be interesting to see if they can move away from mortgage purchases while still convincing the market that it's not a signal. They could also just do nothing, right, and wait for Jackson Hole or beyond. But those are the things that we're watching right off the bat in the statement in the press conference.
Brian, through the data, through the Fed meeting, and we'll get you back on again a much longer duration here as we look at the Morgan Stanley call on fixed income. I look at where we are, Matt Miller, and we had the ECB meeting last week, and one of the clear points of this June, halfway through, is the stasis of the euro. It's absolutely remarkable how still the euro is.
Yeah, absolutely. And Villeroy yesterday was out saying that's their main job at the ECB. To hold the euro is their main focus. And he said the ECB is willing to go at least as long as the Fed with this stimulus.
Matt, what is the perception of Brussels in Germany? I mean, we have a perception of Brussels in the United Kingdom and, frankly, in the United States as well as a distant land. But what is the perception of von der Leyen and Michel and all of the EU EC thing out of Germany?
It may be getting a little bit better now that vaccinations are starting to roll in, but the perception of Brussels in Germany was deeply, deeply injured by the slow vaccination rollout. You know, the government here in Berlin handed off vaccination purchasing and distribution to Brussels, and that looked like a big mistake for a long time from this perspective.
Elisa, 148 10-year yield. We got to stay on that through the day with all this data, don't we?
Yeah, the fact that it's coming back in, the stickiness, as Brian said. I want to point out something that you noted before, the idea of if you can go out to eat, come back to the office. There was a story in the Journal today. Fewer than 3 out of 10 white-collar employees were working at the office on average in 10 of the major cities in the United States. They're going out to eat. They're flying on planes a lot more than that.
Now, it's going to be a battle, to say the least. You know, a delicate battle, I guess is what I'd call it. Thank you so much for listening, particularly listening in Brussels. Maria from Brussels emails in. She says, well, Tom, I'm sorry. Our Vespa, that is our Harley. Thank you, Maria, for observing this morning.
We appreciate your comments.
On the equity market, on a surging Apple computer, Michael Holland in the 8 o'clock hour. Stay with us. This is Bloomberg.
With the first word news, I'm Ritika Gupta. The US and the European Union have agreed to a truce in their 17-year dispute over aircraft subsidy. That's according to EU officials. The battle involving Boeing and Airbus led to the two sides imposing tariffs of more than $11 billion of goods. Policymakers in both the EU and the US are concerned over China's state-sponsored aircraft maker Comac, which is on track to become a major player in the industry. The UK is set to announce the terms of a free trade deal with Australia today. The agreement is expected to cut tariffs on products like Scotch whisky, clothing and cars. British farmers have been concerned they could be undercut by cheap Australian meat imports. The British government has hinted that tariff cuts could be phased in to protect the farmers. China is warning NATO it won't sit back in the face of any challenges. Beijing adds that the alliance should not exaggerate Chinese military power. The statement illustrates the potential for tensions to escalate. The US is trying to convince its allies to take a tougher approach to China. And in the UK, the coronavirus lockdown will last at least another 4 weeks. Prime Minister Boris Johnson pushed back his plan to lift restrictions till at least July the 19th. A more infectious variant has spread rapidly across the country. It threatens to undermine efforts to vaccinate the country's way out of the pandemic. And Deutsche Bank is set to rake in $1 billion on a trader's shipping bet. London trader Mark Spain made a long-shot bet on the once distressed Israeli company Zim Integrated Shipping Services. That's put Deutsche Bank on track for one of its biggest wins since its trade against U.S. subprime securities more than a decade ago. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Our relationship with Russia is at its lowest point since the end of the Cold War. This is due to Russia's aggressive actions. I am confident that the NATO leaders will confirm our dual-track approach to Russia, strong defense combined with dialogue.
Mr. Stoltenberg, the former Prime Minister of Norway there, the leader of NATO, on the festivities of the last day or so. And yes, speaking of defense as well. Matthew Miller in for Jonathan Farrow with Lisa Bramowitz and Tom Keene. We look at a lot of economic data today. Futures up 1, Dow futures go the other way, -15 right now. Right now, if it is Tuesday, and it must be Belgium, good morning to the memory of Tuesday Weld. Maria Tadeo joins us from Brussels for this important moment before this incredibly important summit in Geneva as well. You know, Maria, I look at the Vespa that we've been talking about, and I can just see you in the GTS HPE ABS for $7,100. It's a beautiful, it looks like something Audrey Hepburn would drive wandering through Rome. The romance is there when we talk about Vespas, when we talk about Europe. How's the romance in Brussels this morning between the EU and America?
Well, look, Tom, I think that everyone that I've spoken with, be it diplomats, officials, they all say it's a very different mood. You know, everyone is on message, everyone is relaxed. They're not watching out for tweets, they're not checking Twitter. That's very, to some extent, it really tells you the story here. It's a return to more normal diplomacy. And today, as you know, we're waiting for that agreement over Boeing and Airbus to come to fruition. This is a 5-year truce. And I heard the conversation that you were having. Yes, it's only 5 years, but it's a very clear declaration of intentions to say politics by tariffs is done under this administration. It's over.
With von der Leyen's expertise on German defense, and with Mr. Stoltenberg talking about defense there moments ago, what is the update you have on American troops in Germany and across Europe? Will there be a sharp separation from the Trump dialogue to a new Biden dialogue?
Well, Tom, you know, there could be, but I think the focus when it comes to the troops on the ground, which is already a complicated relationship, and it's always a difficult decision to make, it's not so much focused on Germany now, but it will actually be around the Eastern European countries. It's interesting to note that yesterday, President Biden had a one-on-one meeting with the leaders of Estonia, with Lithuania too, and the Polish Prime Minister, and that gives you a very real sense as to where the anxiety is in Eastern Europe. A lot of those countries, of course, are very close geographically to Russia, and over the past year, we've seen the Russian government move troops very close to the eastern border of Europe. That's always problematic for them.
What about spending, Maria? I mean, Some estimates have the U.S. contributing as much as $7 trillion in total to NATO, whereas Germany has contributed $490 billion. And you know, the U.S. isn't over a billion people, so it doesn't really make much sense that Germany pays so little. They were pushed by Trump to boost that, but they basically said, not going to do it. Is it going to be a problem for Biden?
Well, you know, Matt, I'm so happy you asked me that question, because I have to tell you, yesterday, this was something I just did not hear. This was really not a big conversation at NATO, and it's a big change from the Trump administration. He was obsessed, really fixated with that 2%. That did not feature in the conversations between the leaders there. It was not a big talk behind the scenes. And of course, NATO will say we need the money to be well equipped. Everyone has to pay in. The Americans, of course, want everyone to pay into this, but I was very surprised to see that it just did not feature as a conversation. It was not a big topic yesterday.
Maria, one thing that has been a big topic, both at NATO and the G7, as well as the EU and US summit, is the direction with China. And you flagged this morning. I thought it was fascinating. Ursula von der Leyen, who is the president of the European Commission, coming out and saying, we Europeans want to diversify our imports away from producers like China because we want more sustainability, less environmental damage, and transparency on labor conditions. Maria, why is this so important?
Well, you know, the European Union, again, and many times is accused of being soft on China. But if you actually look at the details, the European Union has been really changing when it comes to China over the past year. The EU-China deal, the investment deal that was approved in Christmas, is completely dead. Diplomats will tell you that. This is not going to get approved. When you look at some of the investment going into China, they'll tell you want to bring some of that outside of China and move away from that. They have too much soft power. The problem with China, however, is that the Europeans look at this as not just a military relationship, but it has to be a full package. And that's what Emmanuel Macron said yesterday. The way to deal with China is not through NATO. It has to be a much more comprehensive view. The Germans also tell you we just can't simply be against China. We need to be for something. We need to have a plan. So it's no good to just say we don't agree with China and we want to be aligned with the United States. We need our own plan to deal with the threats that is Chinese on many ways, not just military, but also economic.
Maria, thank you so much, and thank you again for your coverage. We look forward to Maria today, or from Geneva tomorrow. She is in Brussels this morning. Lisa, I want to get back to the markets, and I really want to stay on script, on tune, on the economic data coming out today. We can really say the seismic shift in the last week towards what Jerome Powell wants, it's literally the markets doing the work for the Fed.
You couldn't have said it better. The idea that we have record low junk bond yields, we've got record highs in the S&P, the fact that the markets are completely sanguine at a time of escalating growth with people buying into the transitory belief. Just going back to that fund manager survey for the month of June, Tom, just to give you a sense, 3/4 of all respondents believe in the transitory story. Only a quarter think that perhaps inflation is stickier.
Matt Miller, I'm looking at the German 10-year as well with that reversal. I mean, we had a huge move on the German 10-year from a significant negative statistic almost up to a positive number. And there's been a good, 20-day reversal or so. It's an elegant chart showing a greater negative yield again on the 10-year yield.
Yeah, I've been watching it very closely as well. And that's why the ECB is really at pains right now to outdove the Fed. They're very concerned about the currency. They typically don't come out and say that it's their job to watch the currency, but yesterday we heard Villeroy say that's their only job.
I mean, Lisa, I mean, having Matt on with us, I mean, it's just simple. We're outdoved.
Are you outdoved? Yeah, I'm outgloomed by.
Well, no, you're never outgloomed. Matt Miller will never outgloom you. We know that as well.
He gets too much of a thrill from a car.
But it really, talks to the inflationistas, Lisa. I mean, I love what Matt says there because, the out-hawks have disappeared.
Well, this actually is a pretty important question, and Matt, weigh in here. The idea if we don't get sticky inflation, the significance of that is dramatic for modern monetary theory, for the idea that you can print money and not create inflation. This is a seismic shift.
Yeah, well, if you don't get inflation, right? And yet we've seen prices for everything from the gas we have to put into our cars to the food that we have to put into our mouths go up to decade highs.
It is tangible. I see it anecdotally from all of our listeners and viewers. Thank you for those emails, tweets, and comments. on the street, frankly, as well. Stay with us. Lots of economic data. The Fed meeting tomorrow. We'll do that at 1:30 tomorrow. Wonderful lineup of experts to give you perspective on Jerome Powell through 2021. Good morning.
Such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Bloomberg Surveillance, good morning to all of you from New York and from Berlin. Matthew Miller in for John Farrow today. Lisa Bramlett and I ready for the economic data here through the morning. Romain Bostic has landed. He's off the Sikorsky, and we look for him here in the next hour. The data mixed here, up 3, -4 on the Dow. The VIX speaks volumes, 16.55. And yet a record high in that surge in the NASDAQ at the close yesterday as well. The 10-year yield of 149, all waiting for the economic data to give us some indication to that important Fed meeting tomorrow. Right now, a really, really important conversation. Not long ago and far away, but a number of years ago, my book of the summer was a sleeper. I did not expect the excellence of stewardship by John Taft. He is Baird Vice Chairman of course, a legacy of this American politics and this Wall Street as well. And it was a primal call by John Taft about the state of Wall Street. We're thrilled that we could revisit with John Taft on stewardship in a time of free. John, a year ago or so, I opened the Wall Street Journal and one page was free trading and the next page was free trading and the page after that was free trading. Everything's free now, and look at the mess we're in with order flow. How do we extract ourselves from all the disaster we've seen from order flow back to something or forward to something more normal?
Well, you're talking about payment for order flow, which is the engine that powers a lot of these quote unquote free retail trading platforms. And Tom, I've always had, I've felt that payment for order flow was a smelly practice. It's legal. It has to be married with all sorts of controls and assurances that you're getting best execution. But if you're selling off customer order flow, and getting paid for that, how does that not create a conflict with your obligation to get the best execution for your clients? I think you're seeing on the part of our new, very capable, very aggressive SEC chairman, Gary Gensler, a commitment to look at that along with many of the other troubling issues surrounding retail trading.
Would you suggest that the leadership of Wall Street, of which certainly you're a voice of and part of, support Mr. Gensler and let's get to this to get some confidence back in trading away from the meme stocks?
Absolutely. I think very highly of the SEC chairman. He's certainly one of the most knowledgeable, game-ready SEC chairman we have had. And he's already laid out pretty clearly what his agenda is. All makes sense to me. Greater transparency around short selling, greater transparency around the use of total return swaps, and payment for order flow, gamification. They're all on his radar. And yes, I think we should get at all of this because, Tom, what we found in the past, we've seen it over and over and over again, it's partly what stewardship is about, is that our industry has a habit of taking legitimate practices that do make a positive difference in the world and running them to excess. And every time we do that, we get in trouble and our clients and customers get in trouble and society gets in trouble. And you can see some indications here of commercial excesses reappearing in the financial markets, and I find those troubling, and I look for regulators to try to tamp those down before they cause a big problem.
John, the focus right now is shifting away from some of the trading activity to why there hasn't been more lending in the banking sector. And as someone who is perfect to speak to the nexus between banking and politics, given your great-grandfather being the president of the United States, there is a question here of how banks will shape themselves going forward as the lenders, as helping to generate some of the recovery through some of the extensions to Main Street. How do you expect that to be transformed in terms of the lack of lending demand, the lack of demand from borrowers to where we are now?
Well, a couple of things are going on. Obviously, the post-COVID softness in the economy led to a decline in demand for traditional lending. But Lisa, one of the things that we've seen going on is there's plenty of money available to be lent. It's just being lent out of the non-bank or shadow financial sector. Private equity funds, hedge funds are lending. And part of the reason for that is that during the financial crisis, the focus was legitimately and appropriately on making sure that banks didn't behave in ways that almost brought a systemic meltdown. And as a result, all sorts of capital requirements and restrictions were put on regulated financial institutions, just like squeezing a balloon. You squeeze it at one end, it grows at the other end. And so we've seen capital available for lending moving out of the regulated to the unregulated banking sector. What I would like to see is, and there is some of this going on, or was, let me put it, during the Trump administration, remains to be seen what happens during the Biden administration, is for regulators to take a deep breath, say, okay, we actually here oversaw a success story. We oversaw the rebooting of the financial sector. We put it on sounder footing, safer, sounder, more stable than it's been in a long time. Can we take some steps to make it easier for regulated financial institutions to do the job that society wants them to do? Are we being too restrictive? And that's sort of a counterintuitive to the regulators in place now under the Biden administration. But I think that's what's needed at this point. It's sort of a relook at Dodd-Frank, not a reinstitution of Dodd-Frank.
So on the flip side, do you think that systemic risk has built up in the shadow banking system?
Yeah, certainly a lot of people are worried about that. And yes, I think that there are indications that, as there always are, risk-taking is being pushed to dangerous levels in some areas of the unregulated financial sector. That you just saw one in the explosion of Archegos, and what was the risk being taken there? Well, it was embedded in total return swaps around which there isn't the same transparency and there aren't the same disclosure obligations as there are with normal stock positions, major stock positions in publicly traded companies. And those kinds of holes in the system sometimes can destabilize the financial system. Now, that wasn't big enough. The banks took heavy losses, but they weren't system threatening, weren't even institution threatening. But yes, I worry about excesses building up. They always do. We have a number of organizations like FSOC and various research capabilities that we didn't have going into the financial institution, supposed to be scanning for risk. Are they? Let's hope so.
I was reading, John, a story yesterday about Representative Tom Suozzi from New York. He's pushing for a 2.5% levy on wealth of more than $50 million. He says it's a one-off, but we know how those things go. Interestingly, your great-grandfather was a champion of the 16th Amendment, brought in the federal income tax for really the first time in 1913. What do you think about now transitioning to or adding on a wealth tax?
Boy, it never fails. You get me to talk about politics on surveillance. My PR people say, don't talk about politics. Don't talk about your Republican legacy. I guess here's the way I feel. And I think a lot of Americans and people in the financial services industry feel this way. We think taxes can make sense if they are used to invest in productive assets in the real economy that make the economy grow faster. Let's face it, unless you want to look at something like long-term inflation, the only viable way out of the hole we've dug ourselves in the course of the last 3 or 4 years is to grow our way out of it. And if raising taxes and putting that money to work in a solid, legitimate infrastructure package is something that Congress can find their way to do, then that's great. If, on the other hand, wealth tax is being used to fund more social spending, then we're just digging the hole we're in deeper. And so it really depends what is going to be the use of a tax increase, whether it's one time or capital gains or ongoing income tax increase. I would just point out that William Howard Taft, though, his focus was on corporate income taxes, not personal income taxes.
John Taft, thank you so much with Baird. Their vice chairman there on order flow and on some of the moments we've seen, such as Archegos this morning. He is again with Baird. Futures up 2, Dow futures at -10. It's just, Lisa, I'm going to call it a real stasis in the market right now.
Yeah, I'm really still thinking about what he said, what John Taft said about the shadow banking system. And this is something a lot of people have raised, the idea that it has ballooned. If you take a look at the private asset market, it now includes about $7 trillion, $7.5 trillion of assets, expected to double in the next 4 years or so. A question of how much risk is really developing, whether it really is systemic if it isn't concentrated in a big institution, or if some of these institutions have gotten big enough to be that way. These are important questions that really haven't been tested. And Tom, this is one of the potential consequences of a prolonged period of time of such low interest rates, leading to complacency without people perhaps checking some of this risk.
Well, and again, it's the walls of worry that are out there. Again, I want to point out SPX and NASDAQ up to record highs yesterday. And you look at the framework of worry out there, whether it's in economics or frankly, just in the earnings season coming up, it's a real mystery. Matt Miller, I look at where the president is and going to Mr. Putin tomorrow in Geneva. Your thoughts on how the president and Mr. Putin will get on in Geneva?
Well, I don't think they're going to be great friends, considering the fact that Biden has already called Putin a killer in a telephone conversation. But maybe they're going to be able to work something out. It doesn't. No one else has been able to deal with the power and maybe the overreach of Putin here in Europe. And President Trump wasn't able to stop him either. So it'll be interesting to see what President Biden does.
We will have coverage from Geneva tomorrow. Our team from the White House traveling with Mr. Biden, including Josh Wingrove and Jennifer Jacobs, will be with us. Also, Maria Tadeo scheduled to be in Geneva as well. Please stay with us. Economic data in an hour and a half, I'm going to call it. It's sort of early morning time, right? Hour and a half. Retail sales. This is Bloomberg. Good morning.
With the First Word News, I'm Ritika Gupta. It's a trade dispute that has lasted 17 years. Now the US and the European Union have agreed to a 5-year truce in a fight over aircraft subsidies to Airbus and Boeing. That battle led the two sides to impose tariffs on $11.5 billion of each other's exports. A formal announcement is expected later today. And the European Union is set to lift travel restrictions for U.S. residents as soon as this week. Bloomberg's learned the U.S. would be added to a so-called white list of countries from which non-essential travel to the EU is allowed. That will be a boost to airlines such as Lufthansa and Air France, which rely on the profitable transatlantic routes. President Biden calls Vladimir Putin bright, tough, and a worthy adversary. At a news conference following the NATO summit, the president said he will tell the Russian leader at their meeting tomorrow that it's in his interest to change the perception of him. He warns that if opposition leader Alexei Navalny dies in prison, it would be a tragedy that would hurt Putin's relations with the rest of the world. For now, a bipartisan group of 10 senators working on a compromise infrastructure plan are keeping the idea of indexing the gasoline tax to inflation. The White House is opposed. The Senate group hasn't released details of its plan yet, a sign that lawmakers are having problems bridging partisan differences. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
No efficacy trial against variants. And so our trial, while it got 90% overall efficacy against the variants, which were 82% of our trial, we got 93% efficacy. And so that's really important to talk about future vaccination. It shows that our vaccine works consistently in different clinical trials in different geographies.
Mr. Eric of Novavax are yesterday with their very, very good news. On this Tuesday morning, the president of Belgium were waiting for the beginning of the U.S.-EU summit, widely anticipated. I should say we should have images for you of that here in really almost moments. We're waiting for that right now. In the meantime, and again, we're waiting for economic data later, we must sit on the pandemic, and it's wonderful to do that with Amish Adalja of Johns Hopkins Center for Health Security Senior Scholar. Matt Miller and Lisa Bramwitz with me this morning. Dr. Adalja, we're throwing around numbers as amateurs, and one of the numbers is 70% vaccination. To a pro like you, what does that statistic mean?
It's really just a number that was picked. I think it's you want to have as high a number as possible. That's the goal that President Biden has set for July 4th, to have 70% of adults getting one dose. But you have to remember that we're going to see benefits even if we don't make that target, and it looks like we're not going to make that target. We've already seen benefits in terms of cases, and we've seen extreme benefit when it comes to hospital capacity concerns. And you have to remember that it's not just that 70% that have gotten one dose that are contributing to this. It's also people who've got natural immunity from prior infection. So we're on a good pace, even if we don't meet Joe Biden's goal of 70%. I think we should strive for it. We should celebrate if we get to that, but I think we're in good shape regardless.
Do you think that businesses should require employees to get vaccinated at this point?
I do think that this is something each business has to think about, depending upon what the function of their business are. I think, for example, healthcare industry, companies, hospitals, nursing homes, that needs to be mandatory there. It should be a condition of employment. Other businesses should do all they can to encourage people to get vaccinated, make it as easy as possible, giving them days off, giving them enticements, also giving them privileges when they are fully vaccinated, meaning they don't have to wear their mask at work, they don't have to have their business travel scrutinized. All of that, I think, would be important. Whether or not they need to fully mandate it, I think, I'd lean towards yes, but I think that there's some variability depending upon the company and the industry.
Dr. Adalja, the question has to do with corporate America and, frankly, the global corporations. However, it also has to do with schools, especially as we head toward August, September, when people start going back to the classroom. Do you think that eventually we will move to a regime where a COVID-19 shot will be alongside the measles, mumps, and tetanus?
I definitely think that's where we're going. This is going to be a virus that's with us long after the public health emergency is ended. And this is going to probably be something that's a routine childhood immunization, where we don't think much of it, just how we don't think about tetanus or diphtheria or pertussis. And it's given to children at some period of time, and it becomes normal. And it may not be these first-generation vaccines. It might be a second-generation vaccine that becomes the routine childhood one.
just one time? Or, I mean, I would think that it's going to be something more like the flu vaccine, where we get it every season. Is that more likely?
No, I don't think that's likely. I think it's too hard we can't play the time faster than it's going. We've got to follow people who've been vaccinated and see, are they getting breakthrough infections that are severe enough to land them in the hospital? Are they contagious? To know when there might be a need for an update. And remember, the flu vaccine is given every year because it gets updated, because it's a totally different vaccine. We know so far with all of these vaccines for COVID-19 that they work against the variants. There's no reason to necessarily update the vaccine. So there may be a booster that's needed, but it could be 2 years, it could be 3 years. It's impossible to tell that until we actually follow people who've been vaccinated and see what happens to them.
Doc, we have, according to the Johns Hopkins website here, 44.15% of Americans have been fully vaccinated, whereas 44.85% of people in the United Kingdom have been fully vaccinated. And yet there's a new outbreak, some are saying third wave in the UK. Is that all to do with the Delta variant, or what's happening there, and could it happen in the US as well?
So it does appear that the Delta variant is a more contagious version of this virus. And remember, the Delta variant is the new name for what was once called the Indian variant, where it was first described. And it seems this is more contagious. We don't know if it's more severe, but we do know that vaccines, especially the Pfizer-Moderna vaccines, having 2 doses of that is very protective. But also remember that our goal with the vaccine was to decouple cases from hospitalizations and deaths. So I'm less worried about cases occurring because we know the virus is there and we know they're unvaccinated populations. Hopefully, wherever the Delta variant appears, you're going to have high-risk individuals heavily vaccinated, meaning people above the age of 65. 75% of those are fully vaccinated in the United States. So we may see Delta variant kick up and cause cases and disruption, but I don't think it's going to have the capacity in the U.S. to be able to put a hospital into crisis because our high-risk people are all fully vaccinated for the most part.
Dr. Adaljo, thank you so much, and thank you for your repeated visits with us. Ms. Adaljo with Johns Hopkins Center for Health Security this morning. Lisa, I want to dive into retail sales. We're waiting on the president in Brussels right now, but I agree with you, Lisa. There's a real feeling out there, sort of within market economics, of maybe not a, am I right, Lisa, not a miss, but just a little soggy.
A decline, a month-over-month decline of negative 0.7%. The interest here is that this is coming from a decline in goods purchases, right? People aren't buying as much stuff because they're actually going out and doing things and buying airplane tickets and renting cars, and that's where you're seeing the inflation, right? So really later in the month, Tom, we're going to be seeing the inflation-adjusted goods and services data, and that perhaps will be a little more telling when it comes to how much cash people are actually spending from their savings accounts.
But the backdrop of this is we walked away from the inflation talk. I mean, you see it with the yield right now to 4 digits, 1.4905. Yeah. When you dovetail the economics into the yield story, as we heard from Mr. Weinstein of Morgan Stanley, all in all, it's about an American recovery that looks more durable than the gloom of 2 months ago.
Well, the Organization for Economic Cooperation and Development came out with a report showing that there are millions of jobs that not only are still missing, but will likely still be missing a year from now. And the question is, how much does this reduce inflationary pressures? The idea that around the world, there are still so many people who are not getting back into the labor force, the underemployed, the people who are out of the labor force. And this has been the persistent question. You know, how quickly can we close that gap? And if it is persistent, do we not really get that inflation that people are expecting?
Matt Miller, are the underemployed in Europe as well, or is this from a technological standpoint a uniquely American issue?
Well, no, that's a European issue as well. But of course, we have a social safety net that helps them out. You know, the OECD report that Lisa brought up, I think was interesting as well this morning because it also showed some real red signals in terms of the housing market. We could be on the cusp of a real problem in terms of rising prices and not enough inventory.
We've got lots coming up here as well. We're again waiting on the president with Ms. van der Leyen and Mr. Michel in Brussels before a trip to Geneva. Futures again up 3, Dow futures -5. The yields is just very quiet all in all this morning. There is a headline of national recovery. Washington, D.C. and the National Mall to open for July 4th fireworks. Again, Bloomberg with our coverage of Boston and the Boston Pops as well. Please stay with us. This is Bloomberg. Good morning.
We've sadly lost 12,000 premises across the sector as a whole. We lost about 330,000 additional staff in terms of headcount through the pandemic. It is a gradual road to recovery, but I am feeling much more optimistic. The positive response we've seen from consumers in returning to eating and drinking out, even outside, has been very welcome. And of course, we're not out of the woods yet, because we know that about 20% will struggle to reopen with social distancing restrictions, and every day that they are closed makes it less likely that they'll be able to reopen. So I think you will see continued business failures within hospitality over the course of the next year. Well, I think the government support has been unprecedented. Equally unprecedented is the hit that hospitality has taken. So we do need the government to look at a solution on rents, which is going to be critical to recovery, a recapitalization strategy to tackle the levels of debt that these businesses are going to come out of the pandemic with. So this government support, fantastic, has allowed us to maintain a large number of staff that we would have undoubtedly lost along the way had we not had furlough. But furlough actually is costing the businesses to implement at the moment, and the costs of staying closed, the industry is burning through £500 million a month in ongoing costs.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We are in a boom. There are some supply-side dislocations that are a bit confusing, but I think growth is going to be quite strong.
Low inflation, low rates, positive economic growth, and strong earnings. That's a pretty good backdrop for risk-taking.
The Fed has successfully lulled everybody to sleep with the Kool-Aid that they are never really going to focus on inflation.
I think in the June meeting, I think if they say anything hawkish, it'll be a mistake.
The question is, what risks are most important to the Fed and what risks are most important to the world economy?
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast on Bloomberg Radio, Bloomberg Television. We welcome all of you around the world here. Romaine Bostic in for John Miller, Matt Farrow.
It's a transitory show.
Romaine Bostic in for somebody this morning as well. Lisa Abramowitz is a face I know. We're glad that she's here as well. I'm going down in flames here this morning. What is not is the market. Romaine Bostic, that close yesterday afternoon. What does that symbolize for Jerome Powell?
I'm not sure. I don't know exactly what it symbolizes for Jerome Powell, but I think for the market, it is really the general idea here that rates aren't really going anywhere for a while, that they will be lower for longer, and that's why you saw a rotation back into some of those big cap tech names. That's what sort of pushed the S&P very gingerly back up to that record high, and of course the NASDAQ and the NASDAQ composite to a record high as well. Nice
recovery as well. And Lisa Abramowitz, who really speaks to the economic data we'll see here in the next 90 minutes on PPI and inflation metric of business. And also on retail sales. And Lisa, it's a recalibration out 90 days, out 100 days, even out 200 days to the mystery of Q3, Q4, and into 2022.
Tom, earlier you said the market is speaking. It is speaking. And part of what it's saying is that it expects the Fed to have a successful exit from its unprecedented stimulus efforts. That is a pretty big ask. And to me, this is a question that I do not know the answer to. Neither does anybody else. But the idea that their balance sheet at $8 trillion, which is has expanded rapidly, continues to expand. The idea that zero rates could end at some point and that the markets could continue to hum along without some sort of financial disruption is one that's becoming increasingly tenuous as markets become that much more elevated, Tom.
Well, 4250 on the S&P 500 the last 12 months. It's up only 39% over the last 12 months, so I guess that's been a market move. Lisa, if it is Tuesday, it must be Belgium. Somebody said, where did that come from? Folks, that was a movie from my youth. We all were in love with Tuesday Weld. If it's Tuesday, it must be Belgium. This was a movie from
there must be a song.
Ages.
We'll hear it later.
There was a song. I can't remember what it was. Thank God for everyone's ears as well. But the president in Belgium, Lisa, and it is a template for the drama and surely the moment we'll see tomorrow in Geneva, Switzerland.
Yeah, and just to cross some of the rhetoric that we're hearing out of that summit with the markets, a lot of people are looking to the second half of the year to hear more trade war rhetoric, to hear more specific risk around the U.S. and the EU and the China relationship, the dynamic that is getting more tense, especially with some of the rhetoric out of Ms. van der Leyen overnight. The idea here that she came out and she said, this is a concern for us. We are trying to direct trade away from China. Those are fighting words to the nation, Tom.
In data, let's go to the data right now. Bitcoin 40,000, just under that level. Is Romain Bostic, help me out with the equity market here. Let me give the levels. 4250, Standard & Poor's 500, 34,200 on Dow. And the NASDAQ, and there's the composite and the 100. I look at the NASDAQ 100, 14,135 is a wow statistic.
It's a wow statistic. And look, I mean, you sort of saw the reawakening here of some of those large cap tech names. That's what sort of got the NASDAQ back above that all-time high from April. But we should point out, too, the S&P has really just sort of been creeping along, record high after record high. I think right now we're something like 28, 29 record highs that we've hit so far year to date right now. Several of those, of course, have come just over the past few days.
What did you learn from the close yesterday on correlations between equities and bonds, Romain?
Well, that there's no hedge right now, at least not if you're looking in the fixed income market. We talked to, in fact, we had two great guests yesterday, fixed income managers over at CIT and over at North Coast, both kind of lamenting the fact that they're actually fixed income managers. One even going so far to say he wished that he was managing equities.
Well, we will see again. We watch for Brussels here. Our Maria Tadeo in Brussels this morning. Lisa, you have a brief.
Yeah, I will just say a lot of fixed income managers are becoming more equity-like as they turn to both convertibles as well as, in some cases, equities in their riskier baskets. 8:30 a.m. Eastern time, we get that U.S. retail sales data as well as PPI. Retail sales expected to come in with a slight decline. People will look past it. They will say, this is people not buying as many goods, going to the services. Then today, the EU-U.S. summit being held in Brussels. As Tom was saying, I am interested in this Airbus-Boeing agreement. Yes, it's only for 5 years. It signals, though, a huge softening in the relationship between the two regions and this idea of working together in a post-Trumpian era. And then at 4 p.m., we get a sense of the foreign demand for treasuries, which has been on fire with the tick data coming out for the month of April. Yes, it's backward looking, but as the dollar weakens and as people believe in the prospect for it to stay somewhat stable, albeit weaker than it was earlier in the year, a lot of foreign investors see the U.S. still as the highest yielding spot, talking about how global the bond market really is, Tom.
Very good. Right now, this is a really important conversation. Sarah Hunt with us with Alpine Woods Capital Investors. And what's so great about it, this is in the trenches of portfolio construction versus sort of the econobabble that's out there right now. Sarah Hunt, I am absolutely fascinated with how you perceive big tech. We saw the Apple surge yesterday. Is this big tech unloved, or are we just climbing on board the mega move that we saw of 18 months ago?
Well, I think you had a long pause in some of those big tech stocks. And you look at Apple, you go back to September of last year, and you were basically at levels that were just around where we are now. So that's had some time to digest that fact that it was higher they had a huge swing up, and then everything sort of slowed down and paused on the big tech side while people went and looked at what else is happening in the economy. So they started looking at cyclicals, they started looking in other areas. I think what you're seeing now is the realization that with rates now starting to back off after reaching a high of, I think, 175 on the 10-year the other day, or a couple weeks ago, that you're starting to see people go back to those tech stocks because the growth is still there. And in the end, I think that's what really matters. Because as much as we can look at the different parts of the economy, there's still everything we have is more and more involved with tech. There's semiconductors in almost every single thing we buy these days. So I don't see that the tech space is not a good beneficiary of whatever is happening in the economy, as long as that's good news for the economy.
Sarah, where is the greatest degree of undue complacency in markets right now?
Wow, that's a tough one. I think go back to your Fed discussion. What is the Fed going to do, and how does that play into everything else? It has been a Fed-driven market. All this liquidity has definitely been pushing people out of fixed income and the lamentations of fixed income managers, and has been pushing towards equities and other higher risky assets. How does that play out? How does the Fed back away from that? I think that's going to be, to your point, Lisa, earlier, a very big question, and we don't know how that's going to play out just yet. I think the odds that it actually just ends up continuing in a more quiet way are pretty high to me, but in the end, at some point, they're going to have to do something that's a little bit different than that, and how are markets going to take that?
Yeah, how are markets going to take that? And I wonder, though, Sarah, whether that's so far afield in the future right now, any sort of normalization, that we can continue down this road with regards to the pricing that we're seeing in equities, the pricing that we're seeing in fixed income, and the pricing that we're seeing, frankly, in some of these alternative assets.
Well, I think if you'd asked anybody 4 or 5 years ago, even before the pandemic, you would have said, no, the Fed's going to have to exit their strategy, and this can't continue forever. And here we are, how many years after the financial crisis, still with some very unusual monetary measures globally. And I think that just the rates coming down again in Europe also makes the U.S. look more attractive. I mean, the German 10-year got up to, I think, negative 10 basis points, and now is back lower than that. So I think the U.S. does look better, relatively speaking, but it's still really tough. And I think it's going to be difficult to see how we get out of this. But at the same time, to your point, I think we could keep going with this a lot longer than people think we can.
Sarah, do you have any earnings visibility? 15 days to June 30. We regroup. Alcoa comes out. JP Morgan will start the bank earnings soiree. Do you have any visibility on what earnings look like coming up?
I think this has been such an unusual time frame for so many reasons that it's very difficult to see earnings visibility. I was looking back at some of the banking earnings, and what the estimates were and what they came out with were so wildly different. Some things are more easy or more simple to predict than banking earnings, which I think are very tough to predict. But in the scheme of things, no, I think it's very tough to say we know what earnings are going to be, except that right now people are out there spending money, so they're going to be higher. The question is how much and for how long.
Sarah, thank you so much. Sarah Hunt with us today with Alpine Woods Capital on portfolio construction and the view forward, confidence investing. Lisa, this is something we don't talk enough about. It's one thing to say econobabble this, markets that, trends, duration, yield, and all that, but what do you do with your money actually?
Yeah, you can't just sort of sit on your hands and wait for something to happen, because something's been happening. And to say if somebody's been in triple leverage all cash funds, they might have missed out on a pretty significant rally, quite possibly. I will say this, with respect to the financials, I thought it was really interesting. The JP Morgan's Jamie Dimon came out and warned of a bigger trading revenue drop than people had expected. I think this makes sense. You saw a huge boom in trading on the heels of all of the stimulus, on the heels of the sudden reversal in the view of the markets. And the idea here of a negative comparison, or at least a deteriorating comparison year over year, speaks to peak growth, speaks to peak earnings. Have we crossed that Rubicon? Which industries have we crossed that with, and how much is that priced in?
Your thoughts, Romain?
Yeah, I sort of agree with Lisa. I also think that Jamie Dimon's sort of a master at managing expectations. And I think coming off of that past quarter, you have to kind of talk down the street a little bit, because folks really I think we're starting to price in, I think, things that were a little bit unrealistic for some of these banks to match again in Q3.
Well, the banks are there as well, but Romain, we've got, and of course, Sonali Basak has been on top of this story, this whole idea of waltzing back to work.
Waltzing back to work? Well, I mean, I have to go basically on what Sonali reported, which is, look, I mean, Goldman brought everybody back at once, and a lot of other banks are now looking at this and saying, well, this should be sort of the template, and we'll see how it works out. I don't have any real insight other than to say that I think that, we're coming out of this crisis and everyone's starting to get back.
Look, I think that there is a bigger question here for the banks. And we talk about trading revenues coming out, managing expectations. JP Morgan shares basically flat ahead of the market. It's not like people saw this and really threw up their hands and abandoned banks. There is a question, though, can they increase lending? And if the economy does pick up and people start going back to work and doing things, if the lending picks up, that'll look a lot better for them.
I don't see any indication that, at least. I think it's very important, traditional banking and where it is.
Agreed.
And again, it speaks to the tech move yesterday. Right now, on a percentage basis, well, again, I've got Dow flat, NASDAQ does better than the Standard & Poor's 500 fractionally on a percentage basis. We have economic data coming up at 8:30. The President of the United States in Brussels, Michael Holland later. This is Bloomberg. Good morning.
With the First Word News, I'm Rishka Gupta. The US and the European Union have agreed to a truce in their 17-year dispute over aircraft subsidies. That's according to EU officials. The battle involving Boeing and Airbus led to the two sides imposing tariffs on more than $11 billion of goods. Policymakers in both the EU and US are concerned over China's state-sponsored aircraft maker Comac, which is on track to become a major player in the industry. The UK is set to announce the terms of a free trade deal with Australia today. The agreement is expected to cut tariffs on products like Scotch whisky, clothing and cars. British farmers have been concerned they could be undercut by cheap Australian meat imports. The British government has hinted that tariff cuts could be phased in to protect the farmers. China is warning NATO it won't sit back in the face of any challenges. Beijing adds that the alliance could not exaggerate Chinese military power. The statement illustrates the potential for tensions to escalate. The U.S. is trying to convince its allies to take a tougher approach to China. And 5 months after the assault on the U.S. Capitol, the Biden administration is outlining plans for fighting domestic terrorism. The government promised to be better at using existing federal resources. It also will consider whether more laws are needed to deal with the threat. And it's a setback for AstraZeneca. The drug maker's antibody cocktail was only 33% effective in preventing COVID symptoms in people who had been exposed to the viruses. Astra says it's running other studies of the medicine that could help clarify the findings. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg Surveillance, good morning, everyone. The President of the United States in Brussels. He is at the Europa building with the leaders of the European Union. Like any other capital, I can tell you there's some ugly architecture. And then there's the beauty. The building that he is in is designed by the great Belgian architect Philippe Salmon, and it is spectacular. Salmon owns the architecture of glass and lattices, and it is a stunning building that the President of the United States speaks from this morning. On radio and television, it is a president with a Secretary of State to his right, Gina Raimondo, the Secretary of Commerce, I believe, to the left of the president, are David Weston in conversation with Secretary Raimondo. You'll look for that later this morning. Lisa, this is a moment before a really tense meeting with Mr. Putin tomorrow in Russia.
Yeah, and Russia reporting that it could last 5 to 6 hours, so a lot to discuss there. The question is what the U.S. wants to get out of it other than to say stop the cyber attacks. Russia saying it's not responsible. There still are so many big picture questions, though, especially post-President Trump, which really set a different tone in that relationship.
We're going to watch the markets with a little bit of a lift to the markets, but right now we'll stay on this story. Jack Fitzpatrick joins Bloomberg Government in Washington. Jack, there's a tone of a bipartisan Washington in discussion with China. Is it a bipartisan Washington in discussions about Russia?
It's more or less a bipartisan Washington in discussions about Russia. It's not necessarily always actionable. One, many congressional Republicans are more Russia hawks than former President Trump. But the question is how exactly that manifests itself. Right now, Congress is working on a bill, for example, aimed at competing with China on research and development, investments. When it comes to Russia, they're seen as less of an economic competitor, but the question going forward will be what can Congress actually do on cybersecurity concerns, which is an area where they've mostly sat on their hands in terms of legislating.
Jack, the tariffs, the Boeing, the Airbus announcement, folks, and this has been, of course, talked about for the last 24 hours, and I believe we have the agreement now to suspend aircraft tariffs for 5 years. Great. Jeff Fitzpatrick, do you just assume this Biden administration will pull back on all of the tariff procedures and efforts that Mr. Trump took?
Not necessarily all tariffs. I think that's a very relevant question when it comes to the EU. When it comes to China, that's a very different conversation, but we'll have to see exactly how things pan out at today's meeting with the EU on any other tariffs relating to steel, for example. But we are supposed to get an announcement at 9 relating to the details of this 5-year agreement, at least on the airlines, that was many years in the making. So in general, that is probably a reasonable line of thinking in terms of U.S. tariffs relating to the EU.
How much was China and sort of the rivalry there, the impetus for this agreement?
That was a significant focus. Sort of putting everything down and turning toward China and trying to compete better with China was a significant part of the discussions between the U.S. and the EU. And that clearly is a major part of the discussions on a variety of other issues that we're going to see today between the U.S. and EU. And obviously, I think came up at yesterday's NATO meetings as well.
And the House right now, just sort of on a similar note, is taking up that bill that the Senate already passed on supporting sciences and other technological advancement within the United States, directly to counter, or at least sort of add to the rivalry, the competitive relationship between the U.S. and China. What's the likelihood of that getting passed, given the support that you've seen so far?
It looks good. This got significantly more than the 60-vote threshold in the Senate. The issue right now is that the House is really doing their own thing. They may come to a very similar agreement on these R&D issues, but rather than just taking up the Senate bill, the House is going through its own committees. So it looks like a little bit of a longer process in which House members really go through their own regular order, and there will probably be some work to reconcile the differences between what the House does and what the Senate did. But everything we saw in the Senate appears to show a significant amount of bipartisanship on the issue.
All right, a lot of focus right now on what's going on internationally and the U.S. relationship with its foreign partners here, Jack. There are still a lot of domestic issues out there, and I know we're expected to hear from the Attorney General at some point later today about the threat of domestic terrorism, specifically related to that January 6th attack on the Capitol.
Yes, there was an initial White House fact sheet. We're supposed to hear more today on exactly how the Biden administration can use current resources to prioritize going after white supremacist extremism, that kind of thing. This doesn't get into every specific that lawmakers want when it comes to the disagreements over a 9/11 style January 6th commission. Even when it comes to, there are funding needs to further secure the Capitol, and a debate over something like a retractable fence and exactly what they do with the Capitol Police and the National Guard. So this is a little bit more of a scalpel rather than the big, broad approach that lawmakers have struggled with. But it's one step on what the executive branch can do alone on that issue.
Jack, thank you so much. Jack Fitzpatrick reporting this morning from Washington with Bloomberg at Government. And again, our White House team with the president, including Josh Wingrove. We hope to get reports from them as well as the president moves forward through a Brussels day, and I believe this afternoon leaving for Geneva as well. Lisa, let's swing it back here in 1 hour to the retail report. There is a control group where you take out this and take out that. When I look at the lumpiness of inflation right now, I have real trouble with the control group. I really want to see the overall statistics.
You and everybody else. This is really messy data, and it's a very unique period of time. I will just point out this, that actually, if you look at the surprise index by Citigroup, which takes a look at how many economic indicators come in well above expectations, they've actually been trending up, and they're actually at the highest pace right now since March. So, Tom, there is a sense that, things have been beating more often than missing, and yet still, what does it mean? Everyone sort of dismisses each data point as it comes out. I mean, these used to be relevant.
Romaine, pick it up here, because I find the linkage of what we're going to see in 34 minutes with the stock market to be tangible.
Yeah, it's certainly tangible. And look, we talk about the lumpiness of that data. A lot of the spending, the pickup in spending, frankly, is what's taken out of that control group. And so you talk about, food, energy, you talk about a lot of the services stuff here. So I think you kind of have to fold that in. And look, every economist we talked to said, look, you can't really go by sort of the historical norms of how you would normally measure and read this data. You really have to kind of look at each individual report in and of itself to really get a read of what's going on in the economy.
We will see. Romaine Bostic in for John Farrell this hour and through the morning as well with Lisa Bramwitz. I'm Tom Keene. Thank you for watching on Bloomberg Television, listening on Bloomberg Radio. Again, our team in Europe, in Brussels, and we're watching these markets with the dollar fractionally stronger over 2 days, nicely stronger. The yen, 110.09. Stay with us. This is Bloomberg.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg Surveillance. Good morning, everyone. Lisa Abramowitz, Romain Bostic in for John Farrow. I'm Tom Keene. Thank you for being with us this morning with a mixed view towards economic data in exactly 1 hour. Right now, we're going to launch forward. Really interesting here. First, the individual stock story. I don't know, Romain, are the meme stocks like yesterday's news, or are they actually still there?
Well, they're still there, believe it or not. In fact, I guess we'll start here at the bottom of the board. I mean, think about Cleveland Cliffs, which sort of inexplicably became a meme stock last week. And it rallied about 20-something%. Of course, this is the iron ore maker of iron ore pellets and coils and all that. The company actually came out today and actually raised its EBITDA forecast here. Remember, when a lot of people sort of lumped this in with the meme stocks, there were a lot of folks who pushed back on Wall Street Bets and some of these other sites who said there was a fundamental story here. Of course, we know the CEO of Cleveland Cliffs, he's been pretty antagonistic against short sellers and against a lot of folks in the analyst community here. So we'll see how much weight is actually behind this. But those shares up here about 2% here in the pre-market. Also up, of course, is Boeing. We're finally getting a word here that there might be a truce in that sort of battle between the U.S. and the EU over aircraft subsidies. Still waiting on the formality of that agreement, but giving a little bit of a pop to Boeing, up about 0.7%. Not related to that, but related to the travel space, the Spirit Airlines. That company gave an update for 2Q yesterday, and the analyst seems to like that. Citi actually upgrading the buy today, save those shares up about 3% here in the pre-market. Flip up the board, a few other names that you want to keep your eye on today. Interesting move here in Oracle. They're going to report earnings after the bell. Yesterday, we saw a lot of these application software companies rally pretty hard. Some optimism here that a lot of these names are going to report good earnings. Remember, we get Oracle tonight, and we get Adobe, I believe, tomorrow night. Blue Owl Capital, of course. That's the mashup that just went public. Those shares getting a nice little pop today here on an upgrade and some analyst initiations. And Sage Therapeutics, the pharmaceutical company that's working on this depression medicine, actually just came out with details of its phase 3 study. They seem to be relatively positive on the top line, but investors seem to be looking at something a little bit different, pushing the shares down about 20% here. We'll keep an eye on that, of course, throughout the day.
Romain Bostic, thank you so much as we vault forward with record highs in the NASDAQ and the Standard & Poor's 500. A number of years ago, one of the acclaimed books I spoke of was Robert D. Kaplan's The Return of Marco Polo's World. And it was a piercing book, waltzing around the South China Sea and, of course, the expansion of China across the Pacific Rim. We haven't talked enough about this recently, and we're thrilled to bring you from Australia's Macquarie, their Director of Global Currencies and Interest Rate Strategy, Terry Weissman, joins us, and, of course, legendary years ago at Bear Stearns as well. Dr. Weissman, thank you so much for joining us. Forget about the return of Marco Polo's World. Tell me about the return of the Pacific Rim. I look at ADXY, that index of Pacific Rim currencies, and it is surging.
Yeah, in part because as much as with the rest of the world, Asia is experiencing a high growth period right now. In fact, you have some central banks which were not talking about tightening, now talking about tightening, effectively following some of the rhetoric we've seen out of developed market central banks. That's clearly giving a fillip to some of these Asian currencies. Certainly, the yuan in China has done well in the last few months, in part because of the growth in China, in part because of the premise that China is going to be tightening and yields are going to remain attractive there. In fact, they have been. We've been a long advocate, as you know, of buying Chinese and then getting involved in the Chinese yield market through corporate bonds there. Yeah, so I think you know, typically when you get a recovery, a synchronized global recovery, in fact, or at least when traders begin to anticipate it, emerging market currencies do well. And I think this is part and parcel of what's happening with the Asian currencies right now.
Terry, you've been looking at this for decades. What is the character, and I'm not going to call it a Pacific Rim boom, I don't know if that's accurate or not, but if we have Pacific Rim growth, is it a globalization that is typical, or is there something new going on?
There's something new that's going on these days, and I guess the question is whether it's going to persist into the second half. But keep in mind, there's such a thing as too much growth and too much speculation that's associated with it. And one of the interesting things we're seeing in the marketplace, in fact, it's relevant just overnight with the sell-off in commodities, is that certainly Chinese policymakers think that there might be too much speculation based on too much anticipation of growth. And you've seen it recently with the big rally we've seen in iron price and copper prices. But this is starting to send off or set off alarms among Chinese policymakers. There are plenty of rumors out there, of course, that they're going to release strategic supplies of bulk commodities, that they're going to crack down on speculation, that they're going to limit price increases. And this is happening fairly early in this cycle. And I think this is one of those things that's actually quite different about this cycle, especially as it pertains to China and Asia Pacific more generally. And of course, this has ramifications potentially for other emerging market currencies that would otherwise do well in a rising commodity price environment, but might be made susceptible to Chinese policymakers tightening at this point.
Terry, you began your career in 1991, an economist at the New York Federal Reserve. We are coming to a period of time where economists are wondering the value of data points that are being called increasingly messy. As you talk about what to expect and what gauges to look at, what data points are you looking at for clarity right now?
Yeah, so let's be very clear here. I understand what you mean by some data points being messy in the market, not necessarily reacting to them as you might anticipate. But that's in part because we're in a very, very special situation right now coming out of this pandemic. And the nature of that exit has distorted, I wouldn't say just the data, but the interpretation of the data. The CPI number that came out last week is a case in point, right? It came up above the headline, but the markets didn't seem to react that much, in part because inflation and pricing power was highly concentrated in those 4 or 5 categories that are associated with the reopening. And there wasn't that much inflation elsewhere. I think this is a key idea that's going to last for the next few weeks, where we're going to have to, as economists and as analysts, look well beyond the headline numbers and delve deep into the details to try to ascertain whether or not there is structural inflation in the system, let's say. So far, there isn't, but that's not something you would gather from looking at the headline data. It's only something you would gather from looking at the details.
Okay, so what are some of the key details, Terry, that we should be looking at, that the Federal Reserve economists are looking at to determine what their policy ought to be?
Well, the breadth of inflation, I think, speaking to what I just said about CPI coming out last week, the breadth of inflation is clearly important here. We don't want to see, and I think what the Fed means by sustained inflation is not sustained headline inflation that's concentrated just a few key things. I think what we need to see is sustained inflation across all categories of goods and services in the economy before the Fed would be inclined to think that it's achieved substantial progress with regard to inflation, let's say. So that's key. I think if there's anything that worries me right now about inflation, it's not even what's in the data, it's what's in expectations. And we've seen certain surveys recently pick up quite a bit in the expectations of inflation. But let me be clear here. I don't expect the Fed tomorrow to follow through with that pickup in inflation expectations. Remember, even though they may mark to market 2021 inflation, they may have to simply boost it because they've been surprised by the extent of commodity price increases over the last few weeks and months. It doesn't mean that they're necessarily going to boost by quite a bit, if anything at all, 2022 and 2023 inflation levels. And I think that might emit a sense of calm to the markets when the FOMC the summary of economic projections is published tomorrow.
So Terry, have you been sort of, reassured, I guess, if you will, by the communication that we've gotten so far from the Fed on those inflation expectations and the inflation outlook?
Yes, but I would say, of course, that the Fed, in its approach and methodologies, is not always consistent. For example, it says that it's not going to move until it sees the data prove its thesis. And yet, with inflation, the Fed is willing to come out and say, hey, trust our models and not the headline data you're seeing in front of your screens. I think there's a bit of an inconsistency there. I think other people have highlighted this as well. But let's be clear here. There are reasons for why the Fed is willing to wait a little longer, and certainly potentially into September, October, before it makes a determination as to how large the pace of tapering will be, in part because a lot of this inflation is in fact transitory. And yes, I agree with the Fed in that respect. Not all of it, but quite a bit of it. And the residual amount is what we need to care about. And that will only be figured out as we go down the road into September and October.
Well, let's talk about the other side of the equation here, because I think most people have the Fed's inflation model, or at least they think they have it down. I think there is a little bit of concern about what the employment model is, or at least what sort of metric they're looking at here to judge exactly when we reach full employment or qualitative employment here. And I think that's maybe causing a little bit of some of the disparity that we're seeing here in the market pricing.
Yeah, I would agree. There's a little bit more consistency in the Fed's message about inflation and a little bit more assuredness than there is about the employment situation. Because when you interject things like inclusive growth into your policy goals, it definitely starts to get fuzzy there. But look, let's put it this way. If we continue to grow non-farm payrolls at a rate of 500 or 6,000 workers per month for the next few months, we're probably going to get to a point by around February where we have recovered about, I guess, 75 to maybe 80% of all the employment losses that we've seen since the beginning of the pandemic. I think that would be consistent with substantial progress, let's say, at least with regard to employment. So if you think, for example, that the Fed needs to wait about 4 to 6 months between the time it announces a taper to the point that it starts a taper, that would probably mean that around September, October, they announce a taper and begin a taper sometime in the first quarter of 2022. That's the way we see things now.
And we hope, Dr. Weissman, you can be with us the day they, quote unquote, announce the taper in the autumn. It will be something to see the market reaction. Terry Weissman, thank you so much with Macquarie this morning. I mean, Lisa, there's just this assumption, not of gloom, but somebody's going to go, we're beginning to move away from where we've been. It'll be like boom.
I know.
Boom.
Yeah.
You know?
Wait, one more time. What was that?
Maybe that won't happen. It won't be boom. It'll be like, yeah, whatever.
All I can say is that Terry is saying, that maybe the FOMC projections will calm the markets. If the markets get much calmer, they're not going to have a heartbeat. I mean, honestly, at what point do we perhaps want a little bit of nervousness in markets just to keep things in check?
I'm looking at a fancy what's called point and figure chart, folks. And all you got to know is off the Bloomberg, you can do this. Good morning.
Figure it out.
Romaine Bostick to the good people at Dorsey Wright who own relative strength. Romaine Bostick, okay, in April, in June, but by July of last year, we sort of knew where this was going.
Yeah.
That's an elegant chart, Mr. Bostick.
It is. I don't actually know what chart you're looking at, but
That's okay.
but I assume it looks fantastic, Tom.
Equity market,
It looks
NASDAQ
fantastic,
100
Tom.
chart.
It explains everything.
What a point and figure.
It's the mythical
you
chart.
You point
that
at it and
explains
then you
everything.
figure it out. I love it.
Then you out.
It's a technical term.
I'm going down in flames here. Stay with us. At least on radio, you can't see the flames. Good morning.
Or the chart.
With the first one news, I'm Ritika Gupta. The US and the European Union have agreed to a 5-year tariff truce in that long-standing dispute over subsidies given to Boeing and Airbus. That fight led to more than $11 billion of tariffs on imported goods. The agreement turns the page on a key conflict in former President Trump's trade war with Europe. And the European Union is set to lift travel restrictions for U.S. residents as soon as this week. Bloomberg's learned the U.S. would be added to a so-called white list of countries from which non-essential travel to the EU is allowed. That will be a boost to airlines such as Lufthansa and Air France, which rely on the profitable transatlantic routes. President Biden calls Vladimir Putin bright, tough, and a worthy adversary. At a news conference following the NATO summit, the president said he will tell the Russian leader at their meeting tomorrow that it's in his interest to change the perception of him. He warns that if opposition leader Alexei Navalny dies in prison, it would be a tragedy that would hurt Putin's relations with the rest of the world. And Apple is facing renewed scrutiny in Washington. The issue, the company's compliance with secret Trump-era subpoenas for user data on more than 100 people, including U.S. lawmakers. House Intelligence Committee Chairman Adam Schiff says Congress will look into how giant tech companies handle the subpoenas. Schiff's data was amongst material Apple turned over to the Justice Department. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
every Friday with 30 minutes dedicated to fixed income. I'm Jonathan Ferro. This is Bloomberg Real Yield.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
What scares the Fed more, a persistently high unemployment rate or a touch of inflation that it tells us many times over and over again it has plenty of tools to manage should it occur? I think the Fed, along with every other central bank in the world, has stated its objectives of getting the unemployment rate to the point where it supports persistent price increases near the inflation targets. And we're not there yet.
Carl Weinberg of High Frequency Economics, a blistering interview yesterday on what this Fed is going to do, and mostly what they're going to do is wait. We're going to wait for the economic data. We'll see that in less than 45 minutes. It'll be a real nice setup for tomorrow's Fed meeting. Right now, on the gloom out there, and Lisa, we can go to the pendulum of put and call. Is Dave Wilson on something from my youth, the put-call ratio? With ETFs and all that, does the put-call ratio matter anymore?
Well, it still carries some weight. What you're talking about is getting a sense of how people are looking at the stock market by going to the options market.
By betting short or betting long, betting gloom, or like Lisa, or betting...
Absolutely. And you think about all these meme stocks, we've certainly seen a whole lot of smaller investors buy call options as opposed to buying the underlying shares. So what's happening is that this ratio is getting to levels you haven't seen since 2000. It's something Julian Emanuel over at BTIG pointed out in his latest report. So what we're looking at here, it's called a composite put-call ratio, so it takes in options on indexes as well as individual stocks, and it's a 10-day moving average to kind of smooth out the day-to-day fluctuations. And when you do all that, you find out we're back to the lowest level on this ratio since mid-2000. And if you stand it on its head, it's telling you that there's a whole lot of optimism being reflected in the options market. A little much for Emmanuel's liking.
What's a level of optimism on your storied career? Are we like crazy optimistic now?
Well, I mean, there's a lot of it out there, no question. I mean, you know, we got the latest results from Bank of America's monthly survey of investors. Yeah. Well, you know, among other things, the prevailing view is that inflation is indeed going to be transitory. And, you know, they say commodities have replaced Bitcoin as the most crowded trade, at least in the views of investors.
Let me know when I can make the first trade out of the triple leveraged all cash fund. I'm waiting for a VIX of 9 before I plunge.
You're getting closer. You're definitely getting closer.
16.51 right now. Right now, we wanted Sri Natarajan to stop by with a wonderful essay yesterday on a gentleman at Morgan Stanley. Sri, it is Mr. Pick, and he is a different guy, or is he just a throwback to a Morgan Stanley and a Wall Street of old?
He certainly is a throwback to the old Wall Street, right? Passionate, loyal, let's call him fun and sweary on the trading floor when he was down on the trading floor. Now, of course, he's climbed to the top ranks of Morgan Stanley and potentially one of the likeliest successors to James Gorman when he does decide to hang his boots.
Sri, why is this important? Why is this successor important for the organization?
It's not just Morgan Stanley, right? We have to look across Wall Street, and you look at Jamie Dimon, Brian Moynihan, James Gorman. These are leaders who've really guided their firms through the worst of the financial crisis, beyond the financial crisis, and the recovery that followed. Now, over a decade into all of their runs, Jamie Dimon's, of course, been there for 15 years, James Gorman since 2010, Brian Moynihan around the same time. You are looking at the next card, and in them, you try and find the clue as to the direction that these firms take. Morgan Stanley in the last 10 years has had a massive transformation because it went from a premier investment banking operation to really building out its wealth operations as well, its wealth business as well, and that's a big, stable source of revenue for them now.
Well, and Sri, this is really important at a moment when JP Morgan's Jamie Dimon came out yesterday and said that he's expecting trading revenues to come down significantly this quarter, including versus expectations. How do we look at trading going forward, given the fact that it's notoriously fickle, but also has been an absolute stalwart of the earnings picture for Wall Street?
Look, the best part of Jamie Dimon being CEO for 15 years and counting is that he isn't shackled by the need to be circumspect. His comments yesterday certainly had a bit of a rainy days and Mondays are here again feel to it, but the context is important. Look at it compared to 2019 levels. We knew that the pandemic trading boom was not going to last forever, but even now the forecast that they are putting out there is still significantly higher than the 2019 figures. And if you go and tell all the banks, would you be happy with that? They would take it. They knew that the 2020 Q2, Q3, Q4, the Q1 this year wasn't going to last. And that's what we're looking at. As long as they're significantly ahead of the 2019 numbers, especially in trading, they're all happy.
So we talk a lot here about changing of the guard or potential changing of the guard at the top of some of these banks. Sri, is there going to be a changing of the guard with regards to how these banks are ranked in terms of their investment banking revenue, their trading revenue, et cetera, et cetera?
That's a great question, Romain, because one interesting dynamic during a period of tumult and turmoil, the counterparties, the biggest clients, they flock towards the strongest, biggest banks, towards the JP Morgans, the Morgan Stanley, and the Goldman Sachs. So at a time when the trading wallet had increased, these three banks were also able to increase their market share. Now, when we return to a bit more of a normal trading environment, do they lose just a little bit of the upside, not just from the wallet coming down, but also the market share getting more evenly distributed? So that's one thing that we definitely want to keep an eye out for.
Sri, you have a very valuable chart in your report. I don't want to overplay this, folks. It's somewhat accurate, but not. But essentially, for the last 4 years, there's been a Goldman Sachs underperformance. Is anybody at Goldman Sachs upset about that?
Oh, they will tell you that they've had a new CEO for the last 2 years and change, and he is taking the firm in a new direction. If 2010 to 2020 was the decade where JP Morgan really stamped its presence and became the biggest U.S. bank, the strongest U.S. bank, there are others who are hoping that Goldman will somehow be able to rediscover its pre-financial crisis form and touch in the decade ahead. How they do it will have to be most likely quite different from how they did it before 2008.
Do you see evidence of that in your reporting and what Shonali had at Goldman Sachs offices yesterday, the spirit of Mr. Solomon, let's get back, let's go to work? Do you see evidence that Goldman Sachs can pick it up and outperform as they did for 10 years before 2017?
If the office tower is buzzing all over again and judging a bank's performance by the number of people in the offices and how many are forced back in is an indicator, then Goldman Sachs stands to do well because they have been more aggressive and more out there than any of their peers in bringing people back. But I don't think that's what's going to determine the tale. They've had a good run in the last couple of years because the core of their business, the investment banking operations, have been really strong. Will that give them the runway to also carry out the pivot that they have been attempting with their asset management and their wealth and their consumer operations? We'll have to see on that one.
Sri, thank you so much. Sri Natarajan there on Morgan Stanley, and of course his coverage daily of Goldman Sachs as well. Lisa, it's going to be fascinating to see what Wall Street does. They come back and all that. We go into the summer, and then we got to shape up for bonus season and the retention of key employees. It's going to be sport.
And the competition with big tech that frankly is getting more into financial services.
Well, they're getting in there. The meme thing, I mean, it's going to be interesting what Mr. Gensler does over at SEC, as we've heard from a number of guests as well. Guess what? Green on the screen and a little bit of a lift to it. 30 minutes from important economic data. Stay with us on radio and television. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We are in a boom. There are some supply-side dislocations that are a bit confusing, but I think growth is going to be quite strong.
It has been a Fed-driven market. All this liquidity has definitely been pushing people out of fixed income.
I think in the June meeting, I think if they say anything hawkish, it'll be a mistake.
Are there people that outwardly want to hike sooner? I think that's one thing you watch. The question is, what risks are most important to the Fed and what risks are most important to the world economy?
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Another slew of record highs as we look for the Fed to outdove us all. Good morning. This is Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. Tom Keene, Jonathan Ferro, Lisa Abramowitz, John out, Romaine Bostick very much in. Tom, outdove us all seems to be the theme of the day. There is a complacency that the Fed is not going to be particularly hawkish or whisper the T word.
And I'm really glad you bring this up, Lisa, because on an international basis, there's some real pushback against it. There's a little bit, not out hawkishness, but at least there's some other nations sort of pushing against the huge accommodation we've seen from the Fed. Their accommodation, Lisa, is going to come in 29 minutes with economic data.
Yeah, though it's unclear whether any central bank in the developed world is willing to push against the tide that the Fed is sowing. The idea here that would risk tightening their currency, raising the strength of it, and perhaps hijacking the economy, right? I mean, isn't this the ECB's conundrum right now?
Well, DXY 90.66. Anything under a 90 is maybe an indication of a weaker dollar. And, you know, Romaine, I would say we had dollar stasis here for the last 2 weeks. Do you agree with that?
Yeah, the dollar, the last 2 weeks, probably the last couple years here, really. I mean, look, the general idea here is when you look at the accommodation that we're getting by the Fed, you look at sort of the lack of movement in the dollar. There's no wonder you're seeing stocks continue to sort of creep higher and higher. There's no reason not to be out on that risk spectrum if you believe these conditions are going to persist.
Lisa, what do we do about Brent crude? Is that on Mr. Biden's agenda in Brussels this morning?
Well, it's on the fund manager survey. People saying that long commodities is the most crowded trade, overtaking Bitcoin. At this point, yes, prices at the pump have been going up, probably not enough to create this as an international issue. And nonetheless, it is becoming increasingly an issue with taxes. We can get into that.
And John Farrell's very good about this. I mean, Lisa, Lisa, do you have a driver's license?
I do. I am the only one. Actually, Romaine, do you have a driver's license?
Yes.
Okay, so you do.
Don't.
Tom and John both don't.
What?
Yeah, so on the surveillance
actually, I
road
believe
trip.
that with Tom.
So surveillance road trip.
You know, Brent crude's up 14% since May
Maybach.
21st. I mean, that's a move.
Yeah.
No, it's significant. Look,
It's never too late, Tom, to get a driver's license.
honestly, did you see that people are holding onto their cars for a lot longer because of how expensive it is?
If you ever plan on going below 59th, you're going to need some kind of transportation.
Well, but this is the heart of the matter.
The Bentley.
Lisa, you bring it up and about the cars here, and people are holding them longer, and there's a back and forth. Can anybody afford a new car anymore in America? But the fact is, at 18 million, 17 million units a year, there's that gloom out there, except people are acting with the bid up that we see in used cars. I mean, don't tell me used car prices are transitory.
Well, here's the thing.
everything. You've got, first of all, supply chain disruptions that have forestalled some of the production, right? You've had commodity shortages even, or higher commodity prices that are leading to those higher prices. And you have people who are moving to more suburban areas and they need more cars. They also don't want to take public transportation as much, according to a number of surveys. A confluence of events that could change, but for how long, considering the fact that increasingly people are saying these supply chain disruptions are going to last.
And don't forget about the return of a lot of that fleet buying, that's actually putting a lot of pressure on the market.
Okay, I haven't looked into that. I'll have to read up on that. Right now, we're going to do a data check and get to a really esteemed guest here on the fact that I'm not in this market. Futures up 4, Dow futures up 3, green on the screen with a leading percentage move by the NASDAQ 100, 14,134 on NASDAQ 100. VIX doesn't give me much, but it's a better tape in the last hour, again, 26 minutes away from that economic data. Yield 150, 1.50. That's a backup. And that's like, I mean, bond prices are cratered, Lisa, right? Cratered.
Cratered, yeah. Well, honestly, it's amazing how sticky they've been. I mean, we've been talking about this all morning. It's been stasis, downright stasis, Tom.
Stasis is today's word. Brent crude up 1.2%, 73.74 is a surge. He has seen this before. Michael Holland joins us now from Holland and Company, looking at the idea of careful securities analysis, listening to managements, and moving forward with a more calm and stable approach than the trading. Michael Holland, let's start with the meme trading now. When does this go away, or are we going to live with meme trading forever?
Likely not forever, Tom. By the way, good to see the three of you. The reality is that all of these things do go away, but you just don't know how long they take to go away. So I wouldn't be real fast to get out of your cash position and start shorting the stocks right now.
So, Michael, you just are saying music to Tom's ears. Why do you think that people ought to be holding some cash right now, given the fact that there's extreme accommodation from central banks and ongoing fiscal spending?
Lisa, the history that Tom talks about, the decades I've been on, what happens is when you get to this point where the complacency is actually pretty well earned because the Federal Reserve right now is doing what it's doing. Listen to Carl Weinberg in his testimony in the last couple of days. I think you have very smart people saying things can be pretty good for an extended period of time because of the Fed. Having said that, Tom said earlier in the show, 39% increase over the last 12 months, meme trading stocks, SPACs, et cetera, all the stuff that the bears talk about. Both camps have very smart people in them. Either or both could be right for some period of time. Having said that, I really like an all-weather portfolio so that when things go in the direction no one expects, you're saying, I'm still okay. I'd like to be a survivor in these markets.
All right. Well, let's talk about that survival here. I am curious, Michael, why would anyone buy into the case here that the Fed can sort of orchestrate this proverbial soft landing?
I don't think you buy in, remain 100%. That's exactly the right question. In fact, the soft landing may not happen, and it may happen. I think I'm probably in the school. It probably could be a little messy, but I have no reason to think my prediction would be any good or as good as the three of yours or Carl Weinberg's or anyone else's. So nobody knows the answer to that. Will it be a soft landing? Having said that, it might be, which means that to have 100% triple levered is probably not the preferred position in the stock market. On the other hand, having some cash in case it's wrong, you'll feel better at the end of the day because you will survive.
Michael Holland, when you look at the accounting statements of these companies, it speaks of fundamental analysis. Does fundamental analysis have a value here? Securities analysis have a value here when you see the ratios we're living with?
Absolutely, Tom, because when you get to a time like this, if you are going to inch back into the equity market sometime in the next decade, what you want to have is managements who have financial statements that tell you, as in the case of JP Morgan, for example, you referred to them earlier in the show, they show you why they have fortress-like balance sheets, what the prospects are for their trading revenues, having been so great in the past. There's a gold mine of information in those financial statements, and that's part of why I've been able to survive myself by paying attention to things just like that. Those are kind of immutable things. Facts are stubborn things, as it's been said.
Michael, there's a spectrum of risk and return, and the idea here of there are times to go hard into risk for that return, and then there are times to accept very little return for not being very risky. I don't need to tell you this, but where are you right now on that spectrum?
A perfect question, Lisa, because centuries ago, a very successful investor named Rothschild said, buy when there's blood in the streets. We're certainly not seeing blood in the streets right now. We're seeing the opposite. We're seeing a Federal Reserve which has given a pass to anyone who wants to see assets of any kind go up. So it's time to have some cash, as you said before. So on the risk spectrum, I'm saying you're tilting over the middle to the area where you have to show some caution lights. For sure.
Yeah, but I mean, showing caution. Let's say you don't want to necessarily go into cash or move a large allocation into cash here. You want to stay invested in the market and hopefully take part in whatever upside might actually be left here. Is there safety to be found in that thinking?
Yeah, Romain. I think Tom's question earlier about fundamental analysis is related to the answer to your question. Oracle is going to report after the close tonight. I saw the stock there a few months ago trading at a quite low multiple. The prospects for the company, a management that has shown itself over the years to get it right. And my guess is what they're doing, they report tonight, maybe there'll be a lousy report and it'll go straight down. But I think there are companies, JP Morgan will be in that category, General Motors with Mary Barra. I think that there are places in the market where you can find opportunities, but you have to work at it.
Michael Holland, thank you so much. Greatly appreciate it this morning with Holland and Company, the chairman and the founder there. On Dow, I love saying this, Lisa, Dow 34,275. I'm still not used to that number.
Oh, I just thought you were talking about quoting the Dow, because I know John Farrow is very excited.
I'm just not used to that number.
You know, well, I mean, it's not just that, though. It's everything. I mean, we're getting just absolutely inured to this every day of new highs, whether it's the S&P, whether it's the NASDAQ, new lows on junk bond yields. At what point does this complacency become a reason to worry in itself?
Is there complacency, though, Romain?
I don't know if it's necessarily complacency. I think it's a buy-in, frankly, to the idea here that a lot of people don't think there's anything that can disrupt this, at least in the shorter term, meaning over, say, the next 6 months or so.
I didn't mean to cut you off, Lisa, but I don't see complacency out there. I see a lot of worry on the part of people.
There's worry. There's worry in their speech. There's not worry in their actions, because they see necessarily the amount of cash in the system and where it has to go, right? I mean, do you consider it worry that there has been a record pace of riskier corporate debt issuance so far this year at a time when actual borrowing costs are at an all-time low? Is that caution?
I don't know. We'll have to see. I don't know. What I do know is we have President Biden in Brussels as well this morning. Lots to talk about there. I'm looking at the feed over here off the famed surveillance feed of 42 TV stations, and they're showing a castle in Brussels. I don't know which castle it is, but I think I saw it in the movie Frozen. I'm not sure. Anyways, the president is in Brussels, a conversation with the Commerce Secretary of the United States, the former governor of Rhode Island, David Weston. We'll speak to Gina Raimondo. Stay with us. This is Bloomberg Economic Data in 17 minutes.
With the first word news, I'm Ritika Gupta. The US and the European Union have agreed to a 5-year tariff truce in the long-standing dispute over subsidies given to Boeing and Airbus. That fight led to more than $11 billion of tariffs on imported goods. The agreement turns the page on a key conflict in former President Trump's trade war with Europe. The UK is set to announce the terms of a free trade deal with Australia today. The agreement is expected to cut tariffs on products like scotch, whiskey, clothing and cars. British farmers have been concerned they could be undercut by cheap Australian meat imports. The British government has hinted that tariff cuts could be phased in to protect the farmers. The EU reportedly has excluded 10 of the biggest banks in the debt market from running its lucrative bond sales, according to the Financial Times. That's because they were involved in market rigging scandals. Amongst the banks involved, JP Morgan, Citi, Bank of America, and Barclays. 5 months after the assault on the U.S. Capitol, the Biden administration is outlining plans for fighting domestic terrorism. The government promised to be better at using existing federal resources. It also will consider whether more laws are needed to deal with the threat. Deutsche Bank is set to rake in $1 billion on a trader's shipping bet. London trader Mark Spain made a long-shot bet on the once-distressed Israeli company Zim Integrated Shipping Services. That's put Deutsche Bank on track for one of its biggest wins since its trade against U.S. subprime securities more than a decade ago. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Wednesday, the Fed decides. Will the Fed react to accelerating inflation concerns? Are members eyeing an earlier rate increase? Coverage begins at 1:30 p.m. on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Very positive that we will find an agreement on the Airbus-Boeing issue today in our conversation with our American friends. This is the longest trade dispute in the history of WTO, so it's in our common interest to solve it.
Ursula von der Leyen, the European Commission president there, and she's in important meetings this morning with Mr. Biden as well. Lisa Abramowitz from Maine, Boston, and Tom King, thrilled that you're with us. Economic data here in 12 minutes. Lisa, Christopher Rowan on the same page as you, talking about tepid breath and a subtle loss in momentum yesterday. I really thought maybe that captured the hesitancy up to the final minutes of trading.
There isn't necessarily capitulation to all in on the Fed, right? There is a feeling of wait and see. Are they going to confirm their extreme dovishness, uber dovishness at tomorrow's meeting? And I think that perhaps is where the hesitancy comes in. But you don't see it that many places, right?
Romaine, it's going to be interesting to see as well. Let's do this on Boeing and Airbus. Let's get right to this now. We've just linked up with George Ferguson, Bloomberg Intelligence Senior Aerospace Defense and Airline expert. George, good morning to you. I think of Southwest. I want you to give me the love this morning on Southwest Air, which always took pride in an all-Boeing fleet. Where do we stand with the American Airlines and their desire to play Boeing off Airbus? Do they do that, or is there a nationalistic tendency here?
So good morning. You know, there's really not much of a nationalistic tendency in the U.S. So what we see is two of the fastest growing airlines in the country, Frontier and Spirit Airlines, are an all Airbus fleet. And in the big three, you know, you've got Delta that's really predominantly an Airbus customer. You got United that's considering adding Airbus planes, more Airbus planes. I would think of them more as a Boeing customer, but considering Airbus airplanes. And American went to a mixed fleet a bunch of years ago, coming out of the bankruptcy, or actually before it when they refreshed the fleet. So, no, Americans are quite mercantile when it comes to buying airplanes.
George, how much of a potential hurt is this, or a boon to Boeing, given the fact that Boeing and Airbus now will not be getting any state subsidies going forward for at least the next 5 years?
Yeah, so you know, I think the subsidy part had sort of really played out, right? I think the Europeans used to provide launch aid. I think they weren't giving a lot lately because Boeing was so intense upon it. Boeing had got money out of defense. As Europeans had always claimed that Boeing got an advantage out of defense. So I don't know that the subsidy is really gonna change the equation. I think the big advantage here is that Airbus has a lot more customers in the U.S. and therefore will be able to ship a lot more airplanes without tariffs than Boeing will. Boeing's primary customer in Europe is really Ryanair. They took an order from IAG while the MAX was grounded. But, you know, what we see is a lot of the airlines in Europe are actually Airbus buyers, airlines like Lufthansa, airlines like Air France, Wizz, EasyJet. Those are some of the bigger airlines over there. Really Airbus buyers. A big Boeing buyer, Norwegian, you know, through this downturn has really had some major problems and contracted.
All right, so fold into this, I guess, the idea here of COMAC commercial aircraft over there in China and the idea that it could become a viable competitor. I am curious, George, in your mind, is there room for another player in this space with regards to the larger aircraft?
You know, so I think the Chinese will make room for another player. So as we were getting into the pandemic, what we were seeing is the Chinese were kind of approaching buying almost 300 narrow bodies, you know, things like 737s and A320s every year. And that's what Boeing and Airbus were producing, I don't know, 1,400 airplanes. So they were buying a sizable number of those airplanes. So if they decide they're going to buy their airplane, that puts a big dent in Boeing and Airbus's deliveries for narrow body 737, A320s. So I think the Chinese will make room. I think the threat is a decade out. What we're seeing is they're still doing test flights. I think initially they'll get sold in China. They're going to have to learn how to support an airplane in China and then globally if they want to sell it globally. The way we kind of see it is they would probably sell it into the third world initially, maybe if they do trade deals and things like that. But to compete against the primary customers for Airbus and Boeing outside of China, we think is probably more than a decade away. So I don't know that the threat was immediate, but I think they had to think about it.
George, you're expert on this. The C919 of COMAC, the Chinese commercial aviation. Is it a clone of a Boeing or an Airbus? Is there something new there? Is George Ferguson blown away by the C919?
No, right? Because really what they've done is they've built an airframe, which lots of people can do, and they've put a lot of components out of Europe and the U.S. onto the airplane. Now, in time, I think they'll try to replace those components with Chinese components, right? They want to be in this high-value industry, but right now I'm not concerned about it. It won't be an airplane that beats the 737 or A320, Boeing and Airbus's challenge is to go make the next 737 and A320 that keeps a distance between them and COMAC.
George, before we let you go, we were talking about 8 months ago about deserts full of parked planes, the idea that they were not in use, nobody was flying. Everyone wants to fly now, and yet capacity is more of a concern with respect to pilots, with respect to who is going to staff those planes. Where are we in terms of capacity, how overplaned or underplaned we are heading into 2022?
Yes, I think we're still underplaned. There's still a lot of airplanes parked in the world. I think 25% of the narrow-body fleet is parked. I think there's enough pilots right now, but there's a lot of retirements coming. There's a real lot of retirements coming in the U.S. In the U.S. Airlines, if I could use the word real lot. And so the challenge will be in the years ahead, 23, 24. I think you're going to see, 30,000 U.S. pilot retirements. If there's any type of growth, you need to add on top of that. And then you've got a globe that I think will demand more air travel and therefore need more pilots. What we see is typically when people make more money, they consume more flying, and that will be the challenge. So I don't see it in the next year or two. I think the pilot issue is a couple of years out, but it's coming.
George Ferguson, thank you. I learned a lot there. That was really, really good. George Ferguson, thank you so much with Bloomberg Intelligence. I love it, Lisa. You're outdoved and overplaned.
Welcome to my life. Well, I mean, honestly,
I've never seen it. There's like planes in the desert.
Yes, you can actually see them. If you go out to the desert, you can see the planes all parked there because the conditions are good. We have been overplaned for 14 months.
Wow.
Look, there are pictures of planes for people who are on radio. We're looking.
Is that the desert? It's pretty lush.
I mean, the conditions are really good out there. And remember, you got to bring all of these back online. You have to check them all out. I just wonder, who's going to be ordering planes in the near future, Tom? Who's going to have the money to do that, given how much debt overhang they have?
They're out there. It's a strange business. I did a series of interviews on this. It's absolutely a bizarre business. The pros look at it as engines with a hunk of aluminum between them. I mean, they're all focused on who gets the engines and who does the maintenance of the engines and that. I don't pretend to really understand it. Lisa, into this economic data in 4 or 5 minutes, what will you look for?
I will look for whether the downside surprise is more significant, the idea that people are expecting a decline. But I'm also looking for a sense of momentum, of how quickly people are spending. It's going to be messy data because of how unique this moment is.
All Romaine and I are doing is, can Apple do it 2 days in a row? Big move, 2% move. Yesterday on Apple. The VIX 16.49. Michael McKee awaits a Seattle slew of data. Stay with us on radio and TV. This is Bloomberg.
Vietnamese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người, bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years, from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning, everyone. Bloomberg surveillance economic data upon us right now. We got PPI out, that business inflation of 3 types. Also retail sales, and gazing at the beautitude of the American consumer. Our Michael McKee. Is it just goods-based? Is that what we're doing here, Michael?
Goods-based for retail sales, and they're down 1.3% on the month, which is a bit disappointing. The forecast was for an 0.8 drop, but what we've got here is basically a comparison number rather than an actual number, in the sense that we're still seeing a lot of retail sales, just not as many as there were the prior month, because the stimulus checks are falling out of the economy. The overall retail numbers, retail trade sales down 1.7%, ex autos and gas down 0.8%. That's important because auto sales fell a little bit. There were not as many cars for sale in the month because of the chip shortage. And gasoline prices rose, but rose less than the seasonal adjustment. So that's why you're seeing the 0.8 rise in retail sales.
The people you know at the Fed, Michael McKee, are they folding this in, or do they take it to a 3-month moving average, or do they just discard it because it doesn't show service sector?
Well, they'll look at all of the various components, but yeah, the service sector is, and we get those numbers later in the month. Service sector is where they're expecting to see real growth, as restaurants and all have.
So restaurants and Lisa's bar bill this weekend is not in this data.
Yeah. Yeah, Lisa's bar bill is.
Sure, everyone's worried about my bar bill.
Well, the bar bill is in the data, actually, because food services are in the data. And when you look at the retail sales numbers, food services and drinking places were up by 1.8%. So she did contribute.
Well, thank you. I appreciate that. A lot of people are thanking me for that contribution. There is a sort of tell here that perhaps higher costs are impeding people's willingness to spend. At what point can we take that away from the goods numbers that we're getting here in terms of sales, given the fact that we have seen a pretty big increase in cars, in used car parts, et cetera?
Well, it's a little hard to disentangle it, and we'll get some better read on it when we get the GDP figures that both compare what's been sold to the prices. The problem is that there are differing reasons. It's not just the price of used cars, it's the fact that there are fewer available that keeps people from necessarily buying stuff. It looks like, speaking of prices, that PPI comes in hotter than expected, 0.8% on the month, and the core is up 0.7, which puts the year over year at 6.6%. And I can tell you that is a new record high since the series was changed back in the early part of the century. The core is up 5.3%. So significant increases in producer prices at the factory gate.
Yeah.
One other, let me mention here, Tom, Empire Manufacturing drops a little bit, 17.4, still growth, but not as much as it was, 24.3. Price indexes in the Empire numbers roll over just a little bit, but they're still very, very high.
Romaine Bostic, what I see here is a churn to the markets. We came off a little bit on equities. We come right back. I see markets not all that much moving. To me, Romaine, maybe it's sort of stagflation.
Yeah, potentially here. I mean, look, I mean, you're basically unchanged right now for the major futures here. I am curious, though, Mike. I mean, when you get a read like this where you start to see consumer activity decline, which wasn't unexpected, but you start to see those prices go up here, at what point does that sort of reconcile itself and then you start to see inflation get damped back down?
That's going to be over a couple of months, and it's going to be category by category. We'll see changes in probably the used car price numbers reasonably soon, because more cars will start coming onto lots as the chip shortage ends and people can buy more cars and turn more in. The rental companies will get more in their fleets. Airline fares probably going to start leveling off, especially as business picks up. So
let me know when that happens.
It'll be over a little bit of time. Now, I do want to point out the retail sales figures for April. The total is $409 billion. That's down from 483 in May and from 623 billion in March. And you can see the fading stimulus checks. Yeah.
Brilliant. Michael McKee, thank you so much for that great report. Again, I'm going to call up markets churning here, dollar pretty much stable as well. Joseph Song joins working with Bank of America as their U.S. economist with Ethan Harris and the team. Joseph, thank you so much for joining us. I like the Bank of America tweaks your GDP numbers. You go from a first quarter of prosperity to the boom, a little bit of an adjustment here of the second quarter. What is the clarity that you and Michelle Meyer have on third quarter GDP?
Thanks for having me. Look, we're still very bullish on the U.S. economy right now. We're still looking for 7% growth this year. Obviously, today's retail sales report was definitely on the weaker side, but we were expecting that. We were expecting negative prints for all the major aggregates. But we still see strength in the consumer. If you look at our car data, everything outside of retail sales, grew roughly around 6% on a month-over-month basis. So all that spending is happening on the service side. We saw a lot of strength at the end of the month in May, around Memorial Day, with lodging, travel, restaurant spending really picking up momentum. And early in June, we're seeing that carry through.
So you get through June 30, you go to Q3. I've got question marks on it for radio and TV. How do you guys frame up Q3? Is it a better tone than where you were 90 days ago?
Well, we don't think that the strength that we see in the second quarter will necessarily continue, will be sustained at the very extraordinary levels that we're expecting in Q2. We're looking for double-digit GDP growth. It will soften a bit, but it'll still be well above trend, suggesting the consumer is spending. And remember, there's actually more fiscal aid coming online in Q3 with the child tax credit. So a lot of middle to lower income households will have more dollars to spend.
Joseph, let's talk about the pendulum of stagflation, as Tom so elegantly put. This question of whether people are less inclined to spend as prices go up. Are we seeing signs of that, or is this data completely irrelevant to that based on this changing of the composition of spending?
Yeah, I think Mike is correct in that it's tough to suss out what is the demand and supply effects going on right now. Obviously there is probably some effect with higher prices in the goods sector. But, when we look at our car data, real spending is still up double digits relative to 2019 levels. So even if there's some softening in the goods sector, clearly those dollars are being shifted over to areas where there's still, really strong demand.
All right, yeah, I mean, as we look at these May numbers here, Joseph, I mean, we should point out these April numbers did get revised higher here on that month-over-month number. Of course, we were pretty much flat on the previous reading. That's being revised to up 0.9%. I am curious that when you look at the numbers that we've had here on the retail sales side, and the come down that we're having now, how much are you factoring in the government support and the potential pullback of some of that support, meaning the expanded unemployment benefits, and I guess you can sort of fold in some of the fiscal stimulus that may or may not be coming down the pipe?
Yeah, I mean, that is partially in our kind of slowdown in Q3. But remember that as these unemployment insurance benefits gets pulled back, you'll see more workers re-enter the labor market. And they're actually entering a labor market that is very hot right now, and wages are starting to climb higher. So there actually may not be such a major fiscal cliff where they're losing their benefits and not seeing the same sort of comparable wage levels. There actually might be just, substituting benefits for wages. So income may soften a bit from here on out, but we still are very constructive on the consumer and the household balance sheet.
Okay, well, unfortunately, then that sort of circles me back to sort of the glass half empty scenario here, where if those wage pressures continue higher and that does pull people back into the labor market, then do we have to then start talking about those inflationary pressures and what kind of drag that might mean for economic activity?
Yeah, so in the fall, we think that those kind of labor supply constraints will start to ease. So the higher wages that we're seeing today won't continue to keep climbing higher, right? We'll reach kind of a steady equilibrium where there's more workers that re-enter the labor market as unemployment insurance expires. Also, childcare has been a major issue during the pandemic, and we've heard from a lot of major school districts that they'll be going back to traditional in-person learning. So childcare will be baked in for a lot of parents, which will allow them to re-enter the labor market as well. So that's we think that, that'll lead to greater supply in the labor market, and that will have at least a temporarily a cooling effect on wages, which will keep inflation well kept.
Joseph Sung, thank you so much. Greatly appreciated with Bank of America. Romain, you were working on it. I was working on it. Lisa, Michael McKee, all of us noting revisions on retail sales were really better than good as well. That washes out maybe the gloom that we have on present retail sales as reported for May. But, I'm looking at the markets and they disassociate here with SPX and Dow actually fractionally doing better than NASDAQ 100. That's a change in the last 12 hours.
I think you have to sort of start asking, though, where's the money going? Where's the spending going, I should say, specifically here? And if there is money to be spent, is it actually going to some of those more discretionary items, Tom and Lisa, or is it just going, I guess, to those necessities, food, gas, housing?
I don't know. I'm really struggling to understand these numbers, and I think that the revisions, the size of the revision, that it was originally 0%, it was revised up to almost 1%. The idea here of the messiness of the data speaks to the inability to really read through it, and really people are looking at the specific components. How sticky is the inflation? And I think increasingly the headline numbers are not going to tell the story. I mean, just as we were hearing about earlier and throughout the show, it's going to be the individual components, Tom, that are going to drive people's views.
Yeah, well, I look at, the things that we're looking at, and maybe I'd look at what Bryce Bakchik wrote for Bloomberg as well, Lisa, and they talk about the summer camp stampede. How do you account for summer camp inflation?
How do you account for it? It's a deflation of everything else that you're not going to buy. That bar bill just got a lot slower. You're going to be at home with a bottle of Jack.
And again, seriously, Carl Weinberg was heated about this morning, that inflation is an aggregate number. Good morning to the legacy of Alan Meltzer of Carnegie Mellon. Some things are up, some things are down. But what's that central tendency here?
Yeah, and when you cut a check for a camp, of course, you're not cutting a check for something else, trust me.
Well, yes, and really? Then, when does it funnel into services?
It's
Do we get paid more? We're going to talk all about this coming up. We're going to talk about summer camp bills with Peter Cicchini, Exotic Capital Director of Research. He'll have a lot to say, I'm sure, about summer camp bills and perhaps the bar bill as well. Right now, not seeing a lot of action in markets, Tom.
No, Lisa Bramwitz, thank you so much. The VIX 16.60 churned to the markets. Stay with us. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. It's a trade dispute that has lasted 17 years. Now the US and the European Union have agreed to a 5-year truce in a fight over aircraft subsidies to Airbus and Boeing. That battle led to the two sides imposing tariffs on $11.5 billion of each other's exports. The US Trade Representative Catherine Tai says the tariffs will be suspended as long as the terms of the agreement are upheld. The European Union is set to lift travel restrictions for U.S. residents as soon as this week. Bloomberg's learned the U.S. would be added to a so-called white list of countries from which non-essential travel to the EU is allowed. That will be a boost to airlines such as Lufthansa and Air France, which rely on the profitable transatlantic routes. President Biden calls Vladimir Putin bright, tough, and a worthy adversary. At a news conference following the NATO summit, the president said he will tell the Russian leader at their meeting tomorrow that it's in his interest to change the perception of him. He warns that if opposition leader Alexei Navalny dies in prison, it would be a tragedy that would hurt Putin's relations with the rest of the world. For now, a bipartisan group of 10 senators working on a compromise infrastructure plan are keeping the idea of indexing gasoline tax to inflation. The White House is opposed. The Senate group hasn't released details of its plan yet, a sign that lawmakers are having problems bridging partisan differences. And Apple is facing renewed scrutiny in Washington. The issue, the company's compliance with secret Trump-era subpoenas for user data on more than 100 people, including U.S. lawmakers. House Intelligence Committee Chairman Adam Schiff says Congress will look into how giant tech companies handle the subpoenas. Schiff's data was amongst material Apple turned over to the Justice Department. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
No. Beautiful.
Bloomberg Surveillance. Weekday mornings on Bloomberg Television and Radio.
vaccines weren't ubiquitous, we had to deal with that reality. Now they are. If you can go to a restaurant in New York City, you can come into the office, and we want you in the office. Now, our position here is that we want people to be vaccinated. Well over 90% of our employees who are in the offices are now vaccinated.
Some would say the executive of the decade for global Wall Street, Mr. Gorman, has surprised all at Morgan Stanley, the success of wealth management. And I believe, Romaine Bostick, before we go to Barry Ritholtz, that was the act of the riot being read yesterday by Mr. Gorman.
Yeah, the quote there, of course, is if you can go to a restaurant in New York City, you can certainly come into the office. And that seems to be the tone amongst a lot of bosses, I'm told, Tom.
Well, it's going to be a really interesting evolution here over the next coming days. We've got a busy number of minutes here where we're waiting with David Weston to speak to the Secretary of Commerce, an extremely important conversation, particularly off of the death of tariffs or most tariffs as well. But right now, Barry Ritholtz joins us, Bloomberg opinion columnist. We're thrilled that Mr. Ritholtz could join us this morning. Barry, I saw you in a restaurant in New York here on Friday, or I think maybe it was Saturday as well. Does that mean you're back to the office?
No, I wasn't in the city this weekend. I was enjoying the suburbs, the pool, the beach, just kind of chilling out here. But we officially reopened our office in May.
What was the pushback you got?
You know, the first day we were open, we expected 4 or 5 people to show up, and 20 people showed up, including staff member from Chicago. It was a big love fest. And we have been unofficially open since last year because we have a lot of staff members who live in small apartments, walking distance to the office, and it felt like they were in prison. They said, can we please go back to the office if we follow protocols? And we said, sure, why not? Just a change of scenery and a little elbow space. We never had more than 3 or 4 people in the office at a time over the past year. In May, it's starting to tick up, and now we're seeing 5, 6, 7 people in the office at a time. Everybody is vaccinated, everybody knows the rules, and everybody is respectful of everyone else.
Yeah, what about clients and some of the other folks you interact with here, Barry? Are they also sort of looking now for that FaceTime?
Not yet. I mean, when we launched in 2013, we were a national company, but with a small handful of employees. And so, you know, it's funny, everybody has discovered screen share and FaceTime and Google Hangouts and now Zoom. This is 15-year-old technology. This has been around for a long time. It's funny that the past year has been a proof of concept for big companies that now recognize, oh, maybe we don't need everybody in the office Monday to Friday, 9 to 5. That doesn't make sense. As for clients and prospective clients, nobody has said we're dying to come into the office to see you now. I suspect that'll start to trickle in the fall. New York is very vaccinated, New York City even more so. The rest of the country is coming along. I think people, when we hit 60, 65, 70% fully vaccinated rate, people are going to be much more comfortable traveling and having business meetings.
Yeah, New York City doing well, obviously, right around that 70% rate based on what the officials are telling us. Barry, there's still, though, a culture issue out in finance with regards to the idea that you need to be present if you're going to sort of make it, the idea that you need to be at your desk, you need to be there early, and you need to be in the face of your boss and your clients if you expect to succeed here. Do you think that culture, there's been any sort of dent in that culture because of the pandemic?
Tell me how old the CEO of the company is, and I'll tell you what their views are on returning to office and working from home. It is clearly a generational issue. And in fact, you know, the great hardly kept secret about the work from home pandemic is it was really good for corporate productivity and work. Companies got many more hours out of their employees because there was no commute, there was no bathing, there was no showering or shaving, but people were answering emails at all hours. They were doing work, you know, whenever they could. There was no separation between home life and work life, and that accrued to the benefit of companies.
Barry, what's so important here, and I've been watching a lot of baseball this year, and Liberty Mutual is a big supporter of Major League Baseball and their streaming app, and they've got that great scene where the guys are on the barbecue and his wife turns to him and says, "Can we talk about something besides The Office?" Barry, I mean, you mentioned it's a generational thing. The fact is we're all completely fixated on our jobs. It's the American way, right?
Well, depends on the job, depends on the career. If you're looking at restaurant and hotel and that sort of industries, they're having a really hard time filling those jobs because they're hard work. They're not exactly high pay. It's very often tip driven. So you have no idea what you're going to make. It makes budgeting difficult. And for most people, it's a job, not a career. And a lot of people have said, I need to figure out what I'm going to do, and it ain't waiting tables. So there's that. And we talked last week, but I have to reiterate it. The quits rate is at an all-time record high, meaning people with full-time jobs are saying, thanks, but no thanks. I'm going to go do something on my own, whether it's a startup gig or working as a contractor or whatever it is. They want the control over their life, over their hours, over their work. And that is every bit as important, especially to white-collar workers, as wages.
Barry, thank you so much. Barry Ritholtz with us with Bloomberg Opinion here. Really, one of the great things, and maybe, folks, it's a New York-centric theme, but somehow I think it's around the nation as well, of this whole dynamic of how we're going to work coming out of this pandemic. Romain, we got the economic data out, and I guess now it's on to the Fed.
It is on to the Fed. All eyes now are sort of looking at to what they're going to say tomorrow, how Powell is going to sort of communicate, I guess, not only what the policy is, but more importantly here, whether they've been swayed at all by some of this, I guess, quote unquote, messy data here. I guess the betting right now seems to be that no, there won't be a major change. But look, they've got to update those forecasts. It'll be interesting to see what they say going forward.
And what the companies say as well. I mean, it's interesting to see the first look we're going to see now into June 15 to see the earnings dialogue into June 30 as well.
Particularly out of the banks, because obviously what they say is going to dictate a lot of how the rest of the street feels about the economic conditions.
Very good. Let me do a data check here with futures up. It's been an interesting screen. I'm going to call it a very subtle flip right now, where NASDAQ has eased off and SPX and Dow doing fractionally. These are real little nuance as well, with the VIX back up to 16.62, maybe a befuddlement, bewilderment maybe is a better word for what we see out of the retail revision higher, and a little bit of challenges to this month's retail sales as well. The real yield does next to nothing as well, Romain, and the 10-year yield 1.50% is a yield backup over the last
and the
2
dollar
days
holding,
as well.
and the dollar holding steady right now. Keep an eye, of course, on commodities, seeing a little bit of a bid right now coming back into oil.
We will see. What we've got is much coming up here scheduled. The Secretary of Commerce with our David Weston, and then he will talk to the one bringing in the bacon, the money in the New York City mayoral race, Catherine Garcia. Look for that later today. This is Bloomberg. Good morning.
it's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end.